Hello everyone, welcome to another stream. I hope you're doing well. I'm just finishing up my stock watch list for the day, cleaning things up and seeing if any stock breakouts are forming. So let me just scroll through this final piece of the list. Okay. So as far as my stock picking goes, the SPY is not doing great at the moment. The SPY is kind of in between the EMAs. So it is above the 50, which is good. It is below the 20 and below the 10. Plus the 10 and the 20 EMA are curving down. So that's not really a great sign. If you're wondering what strategy I use, it is pretty simple. It is the Kulamagi free timeless setups that have made me tens of millions. So this trader was in the latest Market Wizards, and he heavily talks about the setups that are kind of easy to implement actually. But the key with trading these setups is you need the right market conditions, and the right market conditions are when the SPY is above the 50, 20, and the 10 EMA, and all three are curving to the upside. So a perfect market condition would be this. Right here. This would be a perfect market condition to buy individual stocks or stock breakouts on individual names. But let's get into the general markets. So let's get into the more general stuff. The first thing that I do is I look at the news. So I look at the breaking news for the previous 24 hours, and I go to Financial Juice. So I also use Twitter. On Twitter, I have a specific list of traders that I follow, and those traders, they usually kind of repost all of the important stuff. They take note of the stuff that is market moving. So I do go through X as well, which I'm not going to do right now because it would kind of be a waste of time, as there's a lot to go through and there's a lot of crap on X as well. But what I do recommend to you is X can be a good source of information, and you can find some pretty good traders on there who do pretty good analysis. So I go to market moving. The latest one, August 25th, which is today, Asim Munir is carrying an offer to Iran to hold the siege and lift sanctions under the Memorandum of Understanding. I don't know what the hell this means, but do I believe it? Absolutely not. So if you look at the track record of the US, if you look at the track record for or of Iran, they're not really good. You know, they say one thing, they do completely a complete opposite thing. So this to me is noise. This to me is just something that I ignore. Let's go to Forex. And I focus on the stuff that is in the red. The US may return diplomats to the Middle East as soon as this week. That's another bullshit statement right there that doesn't carry any weight. Some German stuff, which is not really the number that I'm looking at. GDP. So you can kind of view it as the European GDP. Looks like it's a bit higher than the forecast. Let's go down. So focus shifts to BOJ BAF. US Treasury Secretary Bessent should be set to leave the dollar system if there is no cooperation. We haven't bought a single bond yet. Next operation is September 9th. We'll see. So if you didn't catch the news, there was some big news from the US Treasury announcing big buybacks of bonds. So essentially injecting liquidity into the system and to try and control the long end of the bond yields. And so far, looks like the reaction is bearish. What about the DXY? DXY is kind of pulling back a bit, but the long end is starting to go up. The price is starting to go up at least, and the yield is starting to come down. Oil coming down as well. I don't know why. So I don't see any news in the Middle East. We can take a look at the Strait, the Hormuz traffic. Is there anything new going on here? Latest update, August 16th, and no, there's nothing. So there's nothing going on at the moment. I don't know why oil is down, but it is. So that's interesting to note. And also, like yields, I wouldn't expect the yields to be lower, but they are. Because personally, and from like reading reading information online from the experts, the government intervention, the US Treasury intervention to try and save the long end of bonds is probably not going to work. So probably something like this happens. Or that was the forecast. But now we seem to be following through on the move lower. So interesting development, absolutely. This should be considered, well, possibly bearish for the US dollar, because when this initial drop happened last week on Wednesday, the DXY had a massive drop as well. I mean, they're basically trying to inject liquidity into the system, save the bond market, and sacrifice the US dollar, because anytime you inject liquidity, you devalue the dollar. So it's called a debasement trade. So things like Bitcoin go up, things like gold go up, okay? That's basically how it works. That is basically a debasement trade. So just to finish this, best and every country has a defined timeline to shut down the activities we have identified. Okay, so this is for Iran, I believe. Yeah, this is all for Iran. In my opinion, it doesn't matter much. In my opinion, it just doesn't matter. US eyes 7.5% China over capacity tariffs. Japan to tap AI to speed up materials development. Then you have some Canada news. Trump on Canada. Canada should be ready to cut the electricity. Let's see. I think that's about it. Yeah, that's about it. So nothing much from the breaking news front. If we look at the calendar, pretty flat this week. The only kind of important news that we have coming up is the Jackson Hole Symposium, which is happening on Friday. Okay, so usually the Jackson Hole Symposiums, they were a big event where the Fed gave out clear forward guidance. So the Fed gave out clear statements about the future, about policy shifts, about being dovish, neutral, or hawkish. This time, if you just look at the title, I don't think it's going to be pretty important. I don't think it's going to be market moving. The title is pretty bland. It's probably going to be a boring event, but I'm gonna watch it nevertheless, or I'm gonna watch Financial Juice and keep notes of the actual event. So this week is probably going to be a bit slow, a bit flat in terms of price action. It is the end of August. Usually the volatility starts to kick in beginning of September as the bankers and the pension fund managers and the hedge fund managers, they start coming back from vacation. So the volatility starts to kick in September after Labor Day. So Labor Day, US 2026. Let's see the date. September 7th. So quite late this year. Yeah, but I'm thinking once we start September, I think the volatility can go back in. I think that can happen. I mean, we're getting the news events that I'm watching. So we're getting next week is the NFP, pretty important for the US, of course. But for the general story, I mean, look, the Fed depends on numbers like the NFP, like the CPI inflation. And most central banks, most other central banks in the world, they follow the Fed. So if the Fed is on a hiking or a cutting cycle, they usually follow what the Fed is doing. NFPs next week. PPI, which is the producer price index, and the CPI are week after that. And then you have the Fed on September 16th. You have the Fed funds rate projections, press conference statement, right? So quite a lot of events. And the NFP can absolutely be market moving. So what I like to do to prepare for these big events is we can go to Polymarket. And let's see NFP August US. Do we have the jobs data bet yet? Okay, so how many jobs added in August? This is the bet. So NFP expires September 5th. Let's see. Yes, September 4th. So the current volume is only 14K, which is pretty low. It doesn't really give you a reliable signal. The 0 to 50K is the forecasted number so far. The spread is okay. So you always want to check the volume. You want to check the spread as well, because it'll give you a sort of a rough guideline as to how reliable the signal is. You're trying to guess what will be the forecast here and what will be the actual number. So let's say it is 0 to 50K. That is a bit lower. No, sorry, that is better than the previous number. Okay, that could be considered hawkish and it could be a bit bullish for the US dollar. So for my bet, I'm long on the Aussie dollar. For my bet long on the Aussie dollar, I would prefer for the NFP to come in negative, to come in maybe even lower than the previous number. That's something I want to see. But the volume here is too low, and yeah, the signal is not that great. Let me just see this. So what we can also take a look at is US inflation, August inflation annual. Now this is a bit higher in volume, 30K. I would say you get a reliable signal 100K or above in volume. That's when you get a really, really good signal. But this is okay as a rough guideline. And again, expires September 10th, right? So we still have 15 more days to go. Let's see. The highest chance is for inflation at 3.4%, which is basically the previous number, I believe. If we open up the Edge Finder, we go to data, inflation CPI, US 3.4% was the previous number. And actually, some or more people are betting that it's going to be 3.3 compared to 3.5. So people are leaning for a even lower inflation print, which is good. So low inflation means that the Fed pretty much won't hike interest rates, and that is dovish, and that is bearish for the US dollar. So my Aussie dollar position, my Aussie dollar long should benefit from that decision, okay? So we looked at the inflation. That's about it. We can look at the Fed Watch tool. The market is still pricing in hikes. So still 45.1% chance of one hike, 24% chance of two hikes. Personally, I think this is not going to happen. And it's a big, big opportunity to take a trade on. The Strait is closed for or has been closed for a while now. We're still not seeing elevated inflation in the States. I mean, we're seeing inflation above target, but we're seeing it start to come down a bit. So 4.2% was the peak, and then we went lower and lower and lower. So I don't see a reason for inflation to continue to grind up in the States. And if inflation stays at 3.4%, the Fed will definitely not hike rates. Okay, they definitely won't hike interest rates. That's kind of the theme. That's the theme that I'm betting on, a dovish Fed. Now you can play that from many assets. You can buy gold. You can buy Bitcoin. You can buy stocks because the dovish Fed is always or is pretty bullish for stocks. So you can play it for many, many different things. I'm looking to play it with the Aussie dollar, which I already have a position on, and gold. I'm looking for pullbacks on gold. So if we can pull back, retest the 200 SMA, I think that's going to be a good opportunity to get in. Euro yen, I don't really like anymore. Euro yen, I wanted to go short, betting on a weaker euro and a strong yen, but I don't think that's going to be a pretty good trade. For now, let me just check the Edge Finder reading. Bullish reading so far, okay. Today, pretty quiet. The biggest surprise to me is the yields, even the 10-year. Like the yields are actually starting to come down, which is pretty strange. So good morning to everyone. USD CAD. Okay, USD CAD. Let's take a look. Personally, I'm bearish because I'm bearish on the US dollar, but the CAD, I don't think it's such a strong currency. Personally, yes, so there has been some news about tariffs, which was considered positive for the Canadian dollar at one point and then negative for the Canadian dollar. If you look at the Canadian economy, it's not really doing so well. Let's run it through the top setups. Actually, a very bearish score here. Let me see the heat maps for Canada. Let's see. Pretty bullish. So the latest data points are coming out better than expected. And let's run through some longer term analysis. So GDP for the CAD. See I mean, it's not super. It's not really good data in the long term. So let's look at inflation. Inflation, yes, above target, so above 2%, but not really a massive issue. Not really an issue where you have to aggressively hike interest rates. Let's see the unemployment. Starting to come down. So unemployment is starting to come down a bit. Kind of rounding the top. See? So you had an appreciation. And now you're getting lower data. Now you're getting lower numbers. Possibly improving a bit. So Canadian economy possibly improving a little bit. I may be wrong on this one. This may be an interesting opportunity to get in. Personally, though, I prefer the Aussie. I prefer the Aussie. We can look at some rate probabilities. Let's take a look at the CAD. Hawkish. So hawkish forward projections. Let's see the RBA. Rounding a bit. So if you look at this data as well, you can say that the CAD should be more bullish in the future because a higher interest rate is expected. Not bad. I may be missing something here because this actually doesn't look so bad to sell. If you want to place bets on a bearish US dollar, this could be a good candidate. Again, I'm doing Aussie dollar for now, but maybe I can scale into USD CAD. It's now on this upper trend line, right? So not bad. How do you filter stocks? Do you use the stock box? I use the stock box, yes. And I also use a scanner on TradingView. Okay, so stock box. I really like the top sectors. So I usually try and pick the winners out of the top sectors. like oil and gas at the moment, which is a score of 5. Basic materials, I haven't really checked out much, but oil and gas, I do know. I think I have a winner from oil and gas. Let me see. VLO, yeah, Valero Energy Corporation. So this is a stock that I'm holding, and it's looking pretty good. It is looking pretty good. And again, top stocks. If you want to have like a top setups, but for US stocks, this is it. This is the page that you need. So I do use the stock box, and I also use a scanner, which I have to do. I have to do my scans today. This is it. And these are the filters if you want to copy them, right? So these are my filters that I use. So currently have 201 stocks in the watch list. So once per week, I run through the watch list. I see if anything is setting up. I see the sector, and then I look at the stock box. I look at the top sectors. So for example, right now, basic materials, oil and gas. Okay. And then you can try and filter the best performers. This strategy is still in forward testing. I'm having some pretty good results, but I definitely don't want to post the trades in the A1 Discord before I do extensive forward testing. So this strategy is kind of still, I'm not going to say under development, but still in testing mode. I do want to mention, if you want to get the stock box, if you want to get the Edge Finder, if you want to join the A1 Trading Discord, get all of my trades, you can use the code Marco to get 15% off on the stock box, Edge Finder, and the A1 Trading Discord. So you can get a nice discount. Now, if you want to join the A1 Trading Discord for free, you can do so as well. You can join and see if you like it. There is a link. There's first a QR code on the screen. Then there's a link in the description. And I'll post the link in the comments right now. So give me a second. Okay. So the link is also now in the comments. You can join the Discord for free. Hello, everyone. Marco, can you explain to us about this bond situation? I can. So let me try and make it simple. So the US government has a bunch of debt, right? US debt clock. See, this is the number. This is the debt, and it keeps increasing. Now, the rate at which they need to repay the debt is quoted through bonds. So if we focus on the long end, which is the US 30-year yield, you can say that the interest rate that they have to pay is currently 5.2%. So if you were the US government and you had a huge debt that you needed to repay, what is this, 40 trillion? Something like that. I don't know my billions and trillions. I don't know to count the zeros. But anyway, I think this is 40 trillion. If you're the US government, you have 40 trillion in debt. You have an interest rate that you need to pay. Would you like that interest rate to be lower or higher? Would you want this chart to be lower or higher? Well, you would, of course, want this to be lower, because if it goes to 4%, the interest rate that you need to repay the 30-year yield bond, 30-year bond, is going to be 4% interest. So it's going to be the amount is going to be much smaller, especially when you're dealing in billions and trillions of dollars, right? So the goal of the US government is to have this number go down. The way that they can artificially do it is they can go into the bond market and buy a bunch of bonds. They can introduce artificial demand. So if you have more demand, the price goes up and the yield, which is inverse correlated to the price, goes down. Okay, if there's more buyers, if there's more demand, price goes up, yields go down. So that's why you had this initial spike lower on Wednesday, because of the announcement of future buybacks. But there could be a big problem, because anytime a government interferes in the financial market, it doesn't end well. It definitely doesn't end well, especially because the main reason for the debt being so high has not been taken care of. So the government is not spending less. It's not spending less and trying to lower this number. It's just artificially pumping demand into the bond market and hurting the dollar in the process. So the way to save the bond market is to hurt the dollar. If you pump artificial demand, if you introduce liquidity into the system, the dollar automatically loses value because there's more liquidity. It's called a debasement trade. So the way to play the debasement trade and the way to play all of this artificial demand being pumped into the bond market is to sell the dollar, buy Bitcoin, buy gold. Stocks are good as well. Buy anything against the US dollar, essentially. But gold should be the clear winner. So the biggest winner out of all during a debasement trade, during quantitative easing, during liquidity injections, gold should be the biggest winner. So I hope that explains things. I hope that explains why the US government wants to push the bond yields down. But keep in mind, it's extremely hard to reverse this kind of tsunami of movement, right? I think the explanation is, so if you go to the beach and you try to push the waves with your hand to the sea, it's not going to work. Okay, you may create a small wave like this that goes back to the sea. You may create this, but overall, the huge force of the sea will cause the waves to go back, and just the sheer amount of waves that go back is going to be much bigger than what you can push with your hands. So I think that's a pretty good analogy. Basically, the price here, or the yield, is the sea. This candle right here is the US Treasury trying to push the sea back with their hands. And what you will most likely see in the long term is the sea winning, because there's so much power and so much size pushing the yields up. And the core problem is not being taken care of. The core problem is the US national debt, which is still growing. So you just cannot invent different ways to let's say move capital away from the dollar and into bonds. It's not going to take care of the debt. You need to take care of the primary reason for the bond yields going up. Again, the way to trade it, I think whatever happens, sell the US dollar is the name of the game, and buy gold probably. But you never know what they're going to say. One remark on the rates and the market goes wild. US oil, hello traders. So, US oil. We can briefly cover oil. I don't know why it's down on the day, but it is. I think it's just going to remain stuck in this range. Yeah, no worries, crypto meat. I hope that helps. It's a pretty interesting thing, a pretty interesting situation. What is happening right now in the bond market. Personally, I think they're not going to be able to save it. I think the yield just slowly creeps up higher as the US debt continues to go up as well. They need to do something about this number. Will they do anything? Probably not, because lowering the debt, lowering the spending doesn't get you votes. You know what gets you votes? Increasing the spending and spending more. So we are now in this box. Above 85, below 110 on Brent. And Brent is a great indicator for oil. I think we just stay inside of this range. I think the trade stays closed. I think there's no deal between US and Iran. There's going to be probably an energy crisis in Europe, for example, because Europe is a mass importer of energy. So selling the euro could be a good trade going into this winter, but the crisis will probably be not as big as people expect. So that's my thinking. I have run out of time. Thank you very much for watching. You can catch me again in my second segment of the day. And do not go anywhere because James is coming on in 30 seconds. So I'll play a quick transition and then you will see James. Thank you and see you in the next one.
If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Ladies and gentlemen, hello. I'm finally back at my desk. So hopefully the audio is a lot better. We can stop the whole screen mirroring problem that we had. So let me just, which way should I go? I think it was fine actually. How's everyone doing? Happy, what day is it? Tuesday? Happy Tuesday, guys. Watch out for the commercial. It's just a good transition. Gold making a retracement. I hope DXY needs to clear that huge red candle first before the fall, I believe. Let's have a look at the dollar. I'm not sure what time frame you're talking about, so I'm not sure exactly which red candle. However, if you're talking about the daily, yeah, I would say possibly a retracement slightly here to retest these lows. Oops, for some reason my pen tool's not working. So yeah, some sort of retracement back into these lows might make a bit of sense, and then a continuation lower from there. That's basically all I see here. I think Marco is pretty much spot on, in my opinion. I think selling the US dollar is the way to go. And you can see that reflected in my portfolio actually here. So I've got US dollar yen long still running. Dollar Swiss, I'm actually short on this one. I took this morning based on the edge finder. So actually, if we get rid of the neutral readings, we can see dollar Swiss here, very bearish with a score of -11, which is absolutely fantastic. So yeah, we took this short position, and technically speaking, it looks fantastic. So we've obviously got previous resistance through here on the left side, then it turned support. Now we've broken below, looking like a break and retest into the 50% retracement. The H4 trend here is also flipped bearish. Edge find is bearish. Everything has aligned. Crypto Meat, good to see you. Ray Beast, hello. How are you guys doing? Joey Tribbiani. Love the Friends reference. Okay, so yeah, dollar Swiss, I'm short. I'm still long on gold, which is running absolutely fantastically. This is on track to actually be one of my best trades, maybe ever, actually, depending on how it develops from here. Now, unfortunately, these are tiny positions. These are 0.01 each. So in terms of the R&R looks impressive. You know, these trades look good. However, this is about 1% profit in total between all of them. So don't let the way they look mislead you here. Obviously, I positioned for a DCA approach with lower prices expected, which hasn't happened. So again, although it looks amazing, it's not quite as amazing as maybe it looks. But either way, it's running great. And I'm still long on the Aussie US dollar as well. So that's all of the positions I've got open at the moment. US dollar CAD, I'm looking for potential short on the 50% retracement. Very similar setup to, what was it? Dollar Swiss. So again, previous structure on the left, we've broken below, looking for a retest into this 50% retracement. And the H4 is also quite bearish here as well. So I do really like this setup, and I do think that being short on the dollar is the way to go at the moment. I just do not really see anything that changes that view in any way at all, actually. I think we do have again, because I got back yesterday, I had an absolute nightmare. So yesterday we had someone very kindly jump into the train tracks. So my train was delayed by 4 hours. So I was sat there on my own, just trying to figure out how to get home. It was an absolute nightmare. So anyway, what I'm trying to say is, obviously, I'm not that up to date on the markets, but from what I have seen, Iran is going after Barron Trump's, obviously Donald Trump's son. They've threatened him. I know there's tariffs on Canada, economic threats as well. There's all sorts of stuff going on. So I don't think we're in a position really to be saying that, there's no bolster for the dollar at all. I think we do obviously have a bit of risk premium, but it's not, well, very clearly, I wouldn't say it's enough really to do anything with. It's more a case of actually just selling these pullbacks when the dollar does begin to rise. Not financial advice, of course. Now, that brings me around to silver. Silver is bullish on the edge finder. It's actually more bullish than gold at the moment, or at least it was. So silver is getting a score of 8 and gold is 6. So if we're using the edge finder alone, silver is looking much more attractive. And I do like trading silver a lot more than gold. So I'm looking for a fib pullback here on the H4, obviously fib from the low to the high, looking for a retest into this 50% retracement, into prior highs on the left, again, break and retest type approach. And then I'll be looking for an entry. So it's really, really simple. And with the metals, specifically gold and silver, I am looking for basically all-time highs again. Now, I'm not saying that is like my base case. That's more just a longer-term target. If it's reached, great. I wouldn't be that surprised. But it's not like I'm expecting that, tomorrow. So I am looking again for all-time highs, but that's by no means a short-term idea for, the next 2 or 3 weeks. Moving forwards, I quite like euro dollar to the long side as well. I was on the wrong side of this not too long ago. I think it was like 1 or 2 weeks ago. I was actually short euro dollar, got completely wiped out of that position. So now, because the edge finder is bullish at this time, it looks like we're having the daily moving averages begin to converge here between the 50 and the 200. Fib from the low to the high. Again, very typical break above prior resistance on the left, retest into this 50% retracement, and then a continuation higher. I think with this one, I would be looking for a target around 1.2. Now, the reason 1.2 is because when euro dollar was, back over here, when was this? The start of 2026, give or take. We had the ECB. Was it the ECB? I think it was the ECB, if I remember correctly. Talk about 1.2, saying they really don't want it above 1.2. Now, there wasn't any threats of an intervention or anything like that, but I think that was enough for euro dollar to actually completely fail to hold above 1.2 and come back down. Again, I can't remember exactly what the landscape was at that time, but I know that was quite a big factor, and it was quite a big thing that people were paying attention to at the time. So I'm not sure I would be willing really to hold euro dollar much above 1.2, maybe back up to the prior high, maybe 1.21, give or take. But either way, 1.2 would be sort of the base case bread and butter type target on euro dollar for me. And that's actually it. That's all I'm looking at so far. That's basically as far as my analysis took me this morning. Euro dollar, we actually just covered euro dollar. I hope that answers your question. But yeah, as for fundamentals, I'll get onto that in a second. James, mostly all models sitting on cash, best case for me. Yeah, I actually do quite like that. I think being on cash at the moment is probably the way to go. I think there's, as far as I'm concerned, there's some problems going on. Obviously, as we said earlier, we've got some risk issues regarding the Middle East and things. So, this is speaking worst case. Obviously, I don't want this to happen in any way, but let's say Iran did follow through on what they said with their threats towards Bahrain. It's not necessarily that specifically that I think would be the big thing. I think the reaction from Trump and the US would be then the big issue. So there's that type of risk that we don't have right now, but it is absolutely possible. And then, there's all these other things, like the US dollar is just fundamentally weak. Stocks are getting a bearish reading here. The S&P is not looking great on the edge finder here. So I think there are definitely precautions to take, and I think sitting on cash is probably the right way to go, which is one reason my portfolio is not that busy and my position sizes are so small. And then, if we're talking about stocks specifically, I am still very, very cautious around the AI thing. Again, I've spoken about that quite a lot recently, so I'm not going to keep harping on about the same thing, but it is a big worry for me, actually. So actually, I've just remembered I am short on the Nasdaq. Again, very small position sizes, but I haven't got them marked up here. I think I was short roughly. I've got like 2 positions, but again, very, very small. I've got 2 positions, something like this. I can't remember exactly what the entries were. But yeah, I am short on the Nasdaq, just as a little bit of a, what's the right terminology? I guess I would say like a reference point, or just a experimental position, just to see if it starts working out, I can add a bit more size. If it doesn't, I can cut it for basically no loss, or no significant loss anyway. GPUSD longs, yes, my friend, I would agree with that. Actually, again, the edge finder is bullish on pound dollar, bearish on the US dollar overall. So dollar CAD, dollar Swiss short, US dollar individually is getting a short reading as well. We see Australian dollar, US dollar, gold, silver, pound dollar, euro dollar. I mean, clear theme here on the edge finder of selling the dollar. So I'm not going to trade against that. Now we are clearly creating this double top here on pound dollar, so I wouldn't want to be doing anything at this level. I think the best approach here is obviously fit from the low to the high, and actually this looks quite good. So a reversion back towards this 50% retracement would likely, let me just pull up the pen tool. Actually, hold on, I think the pen tool is not working because there we go. So a pullback towards this 50% retracement would allow price to catch up, or allow the moving average to catch up with price. So I think some sort of entry around here would look quite good to go long. And this does slightly line up with previous structure on the left. It's not perfect, but you can see we've got a bit of resistance through here, a little bit here as well, minus support there as well. So a little bit of structure, again, not super clear or clean, but there you go. Now with pound dollar, in terms of targets, it might be a decent idea to look for these previous highs. So we could look at the previous, what do you want to call this? A double top or maybe a quadruple top, depending on how you look at it. We've got 4 highs here on this daily time frame. So I think this could be quite a good potential take profit level, or maybe even higher. There is a possibility maybe a pound dollar coming all the way back up to 1.7. Although I wouldn't say that's the most likely outcome right now. Excuse me. Oh, we've got a new member. I'm saying we, A1 Trading and Nick, have a new member. Thank you very much for joining. I saw Nick upload a members only video. Maybe I need to get onto that. Maybe that's a secret source. Yesterday closed Visa long for 5%. Very nice, Ray Beast. How do you go about stocks? Do you use the stock box, or do you have your own way of doing it? Joey is also short on the Nasdaq. Very good. On the H4, watching for looking for bearish. Yeah. So when I took the Nasdaq short, we did have the bearish reading on the edge finder. That's obviously dropped off now. The reason I'm still in it is because the Nasdaq just isn't proving anything to the upside. So, I mean, there's obviously no bullish reading. We've got the S&P that's bearish. Obviously, that's not the Nasdaq, but we've still got that overall sort of theme there, in my opinion. And we are still kind of on this downwards trajectory as well. So I'm happy to keep the position for now, but again, I'm not going to allow it much room to move against me here. Toby George, hello James, please US dollar CAD. Yep, we did look at that one briefly. So we do have dollar CAD bearish on the edge finder. That's the most bearish, along with dollar Swiss with a negative 11 score. So it's looking good to be a short seller, fundamentally speaking. It's fully aligned. Now the daily is bullish in this trend, obviously with 250 moving averages. That's not great. And actually, I suppose what I've just noticed here is we are creating these sort of lower highs as well and higher highs. So I would say actually the daily is not. Oh, sorry, this is a weekly. My bad, I must have misclicked. So the weekly is not looking great. However, the daily time frame, here, if we draw the fib from the daily high to the low, we can see our 50% retracement lines up with the previous structure on the left. So again, sort of break and retest type idea. Now, the break and retest here isn't great. And the reason is because we have broken it here. We've obviously broken again. So this level is slightly invalidated because we've broken above and broken below. So it's not being used in the past two times it's been hit. Obviously, it was over here. So just something to take away. It's not the best quality technical setup here, but I'm willing to give it a go. So pull back into the 50% retracement and then looking for continuation lower into the daily lows, which are over here, maybe even lower. I mean, I think with the whole dollar short idea at the moment, it's very much a case of just letting the trades run with trailing stops, of course, because I'm not really seeing anything that's going to come in, or anything at least visible at the moment that's going to really bring the dollar up, but it absolutely could happen. It could happen very quickly, potentially. So that's the risk, obviously. So it's not a case of I'm necessarily actually going to take profit here. It's more a case of this is like a mental take profit or a mental level. I'll trail stops, maybe even take half off at this point. I don't really do partials, but it's something I would consider in this case. Anyway, what we do have on the H4 is this bearish trend, which looks great. So if we could pull into this 50% retracement, that would likely align the 200 with price as well. Again, just giving price, technically speaking, again, a little bit more of a reason to continue lower and have a bit of a bounce off that point. So Yeah, I think we're pretty much set really on the directions of the market, or with the dollar at least. Excuse me. So there's not too much actually I'm really looking at this week. So I would say still being a seller of the yen is still a completely valid idea. So I'm still long on dollar yen. I would have liked to have gotten in pound yen. I completely missed that one though, unfortunately. So I'm not in any yen pairs apart from dollar yen, which I did show you earlier, which is right here. So I've got 3 tiny positions on this market, basically just buying the dip, looking for a continuation towards 164. So yeah, we'll see if this one works out. Dollar Swiss, I did take a short position this morning. So far, it's just a little bit of drawdown, nothing too significant. Still long gold, and I'm still long on Aussie US dollar as well with the trailing stop. So yeah, I'm sat. I mean, very exposed. Well, actually, yeah, somewhat exposed to obviously dollar. So if the dollar decides to strengthen, I'm going to be in a little bit of trouble. However, again, because I've taken small position sizes, I've got a trailing stop on this one. It's not going to be too bad, but obviously that would be a little bit annoying to deal with on my side. Thank you, James. No problem at all. I'm shorting gold once it gets to 47.30. Interesting. Why is that? You don't expect a deeper retest on dollar Swiss? No, not really. I mean, this is my strategy is coming to play. The only thing I don't like here is the daily trend. So we've got the edge finder that's bearish. We've got the fib from actually, I think this was the H4 high, was it? Yeah, it was the H4 high. So the H4 high here to the low, pull back into the 50% retracement. Previous candle closed bearish off of this one. Off of the fib. We've got the bearish trend with the moving averages when they crossed. So yeah, I think it's completely fine. There is, of course, the risk that we actually see a larger correction of the what do you want to call it? It's like the impulsive move on the left. It is what it is. I'm not going to not take a trade because of that. It is something I'm aware of, but I don't care too much. And of course, we do have this structure on the left here as well. So break, retest into the fib, bearish trend, continuation lower, edge finder bearish. Really simple trade. So we'll see how it goes. But yeah, again, I'm aware of the risk of the correction of this candle. Okay, so what else do we have going on? Australian dollar CAD's bearish. Oil, let's take a quick look at oil. I don't think oil's doing very well today or this week, actually, is it? Yeah, oil seems to be really struggling. Although the problem I'm seeing with oil is we're just not really getting any price development. So even though the edge finder is bearish, we are in this wedge. The moving averages are pretty much just sideways. There's really no trend. We created a higher low here, but then this is also a lower high. So it's just a little bit too choppy and messy for me to be interested in any way. H4 actually is a little bit bullish here. So yeah, I think I've kind of got to stay away from oil. And the other side is that although oil might be getting a fundamental reading on the edge finder, we might have a technical setup. Something I've been saying on these streams quite a lot is I just don't want any, or let me rephrase that. I want to minimize my exposure to oil. And that way, these fluctuations in headlines are just not a concern of mine. Of course, if they're a large headline, that can absolutely move my other trades. But oil is just an absolute mess. I don't want to trade that. Are you sure of this trade? What do you mean? Which trade am I sure of? You think copper could be good? Interesting. I have not looked at copper in quite a while, actually. Do we have anything? I don't think there is a reading for copper. Let's start with top-down analysis because I've not checked this in a while. So very bullish on the monthly. Weekly is very bullish. Daily, really bullish as well. H4, yeah, I think actually just being a buyer of copper could be quite nice and just a very simple trend following approach. So fib from the low to the high. Actually, I quite like that. So we could get a correction of a little bit of this impulsive move if we came back to 50% retracement. Excuse me. That would also retest this previous structure. We've had the break, retest continuation pattern, bullish trend here on the H4 and all of the other higher timeframes as well. So yeah, I do like copper. It's not something I would take now because again, as a fundamental trader, I need the edge finder to give me a reading as well. But just on the technicals, I do like it on a trend basis. Silver should have strong support around 66.5. Let's see. Yeah, that's kind of where I'm looking at as well, actually. Yeah, you've kind of hit the nail on the head there as well. So 50% retracement from the low to the high, previous structure on the left, again, break, retest, break, retest, and then continuation. Bullish trend on the H4. Edge finder's bullish. So yeah, everything I would say for silver is looking fantastic. Abol, hello to you as well. Am I sure on the dollar Swiss? Well, yeah. I mean, if I thought it was going to go straight to stops, I wouldn't have taken the trade. I just need to move that there. The thing is, with trading, it's very much a case of you could have multiple stop losses, and then you can have one fantastic trade. So the way I look at my trading is very much more just a case of I don't want to say quantity over quality, because that's just not true, but quantity does really come into play. So if you're taking, I don't know, let's say 3 trades a week or something, just for argument's sake, let's say I don't know, 6 stop out on a 2-week basis, for example. All you really need is just a handful of them to really work, and that is how a lot of traders do operate. So actually, I think Nick is a good example of this. I don't want to speak for him. I don't think that's fair. But from what I've heard and seen from Nick is that it's not a case of every trade is amazing and every trade works out. I don't think anyone trades like that, really. It's more a case of you take attempts on trades that make sense. So in this case, dollar Swiss does make sense. I'm taking a short position. The fundamentals align, the trend aligns, the technicals align. If it doesn't work out, that's fine, because I've got a fantastic trade running on gold. I've got great trades running on dollar yen. I've got a great trade in Aussie US dollar. So it's a case of, okay, well, dollar Swiss might stop out, it might not work. But does that matter? Not really, because I've got other trades that are playing out fine. And even if all of those trades turned around, okay, well, I'm sure the next trade will be okay, or the trade after that will be okay and make up for it. It's all a case of risk to reward, really, is what I'm trying to say. So, yeah, I think that answered your question. I'm not sure, but yeah, I mean, I suppose to add on to that you obviously have sort of conviction levels on trades. There'll be trades you have where you're like, this is pretty much perfect. You couldn't really get any better. The trend's there. Let's say central banks are there. The fundamentals are in line. I am very, very sure on this trade. And those are the ones you hold, you size into, you add a bit more risk on. Maybe you don't trail your stops as aggressively, so you're not stopped out on noise, things like that. But then you'll have day-to-day trades, like, again, this dollar Swiss trade. It's like, it might not work out, but I'm willing to take that risk. We literally just looked at oil like 5 minutes ago. I don't have any directional bias. The edge finder is bearish on oil. I don't like it. I think the H4 is a little bit bullish here. We do have the sort of higher lows getting formed and higher highs. We've got the bullish trend line, the bullish moving averages. But then on the daily, there really isn't anything. Technically speaking, we are in a bullish trend because the 200 is above the 50, but they are side by side at the moment. So that just tells me there's no trend. Then we also have, yes, these higher lows have been formed, but then this is a lower daily high. So there's just nothing going on. We're stuck inside this wedge as well. So I think oil, for me anyway, is just a no-go. I think our size matters. Absolutely. Yes, it is absolutely a big factor. So let me go back to these, like gold. So gold is, as I've been saying, is really small sizes, and that's because I positioned actually for the other way. So I actually wanted this market to go lower. So I was taking extremely small sizes, looking to build into a position over time. Kind of the same thing with dollar yen. I added a little bit more size compared to gold, but still not very much, just in case we did get another intervention or something happen. I don't know, a surprise rate hike by the BOJ or a surprise rate cut by the Fed. Just something, a little bit of protection. Obviously, no actual stop losses on these trades. These are just for visual examples or visual references. But then dollar Swiss is my normal 1% risk because there is a stop loss. It's just one trade. It's not a ladder approach or anything like that. Aussie US dollar, also just standard risk because it's not a ladder trade. It's a hard stop loss, no hard take profit, but hard stop loss, one entry type trade, not a ladder or DCA. So anyway, hopefully that has got my points across. Pound Australian is still bullish. It's weird because Pound Aussie has been bullish for quite a while, but I just don't think it's done anything. No, it's not, which is a little bit annoying, really, because It's a market I wouldn't mind being involved with at some point. I actually don't mind it to the short side, to be honest with you. But again, because the edge finder isn't bearish, it's actually bullish, can't warrant being short. But because the edge finder is bullish, I actually should be going into the long side, but the technicals just aren't doing anything to get me into a long position. So if I remember correctly, I was long somewhere in this area. I can't remember exactly where it was, but I was a buyer at some point in pound Aussie. And it just didn't work out. It's just very, very range bound at the moment, and it's just not something I really see any potential in. So it's one that's definitely on the radar if we end up flipping and doing something. But right now, it's just dead in the water. There's really nothing going on. What else do we have here? Canadian dollar. That's interesting. It's getting a bullish reading. I've just seen as well the Dow is bearish. There might be something on the Dow. I didn't see that earlier. So we've got the Dow and the S&P bearish. Nasdaq was, but it's fallen off. The daily's not looking great. We've got the higher lows getting formed, bullish trend on the daily. So that one's not ideal. I think the Dow is also actually just more of a wait and see market. I think being short probably could be quite fruitful at some point, but given that obviously it's an index, you've got the Nasdaq, the S&P, the Dow, the DAX, the FTSE, so on and so on. The natural drift is to the upside. So being a short seller is just inherently very, very difficult. So even if the edge finder is bearish on these markets, I would take quite a lot of caution unless there is, some real reason to be short. Let's say, I know the edge finder is bearish and the trends are flipped bearish as well. Okay, well then maybe yes. But the fact that the daily, the H4 are bullish, it's just, I think I'm just going to sit away from that one for now at least. What else do we have here? I actually think we've covered pretty much everything, but I've not looked at is a COT report. So let's just take a quick gander through here. So the Nasdaq has been bought. I think the Nasdaq was also quite heavily bought last week as well, which is quite interesting because from what I remember, if I understood it correctly, again, I've been away from the desk for quite a while, the institutions built up a massive short side on the Nasdaq. I think it was either one of the biggest or the biggest that they've ever had. So the fact they've been buying it back for 2 weeks is interesting. I'm not sure what the context behind that would be actually. So I do need to look into that. The Nikkei has been bought as well. So let's have a look at the Nikkei because there might be something there. Actually, you know what? The Nikkei might be quite nice to be a buyer. Let's just take a quick look. So the Nikkei, if we, you know what? Maybe. Now, the downside of this is I don't think the edge finder supports it. So it would really just be a technical play. So the Nikkei, I think, again, if I remember correctly, the Nikkei was bearish on the edge finder. So the fact is it's dropped off. We've still got the bullish trend here on the daily. We've got a pretty nice fib setup. I might go into this actually with a little bit of smaller size. A little bit smaller size than I normally would, just to see if we could get something running. It would also offset a little bit of the risk I've got on the Nasdaq. Obviously, they're not like a direct correlation by any means, but it's more on just the risk side. So if we also look at the Nikkei on higher timeframes, it's just a rocket ship. It makes a lot more sense to just buy the dips on the Nikkei as opposed to trying to sell it. And that idea is reflected pretty much across the board on, again, the S&P, Nasdaq, so on and so on. So yeah, I think being a buyer, probably worth it. So I'm going to very likely take this one actually when I go upstream. If you were to trade now, what would you go for and why? Probably the Nikkei, actually. Reasoning is more just a trend following approach. I don't think fundamentally it's that great. Well, obviously it's not because it's not on the edge finder. So it would be probably half risk. So I normally take 1 to 2% depending on the quality of the trade. On this one, I would very likely size it down to around 0.5, just to be on the safe side. If it works out, it proves itself, then maybe I would increase the size and add in a little bit. But yeah, I do still really like gold and silver, but they both need a little bit more development. So silver, needs to see, or I need to see, should I say, a pullback to 50% retracement, which would be around 66.5, give or take. From there, that would obviously retest its previous highs into the fib and then look for continuation higher. Hi, James. Thursday, I've entered long pound New Zealand. The H4 MA was not aligned, but the daily and weekly MA aligned. Okay, let's take a look at pound New Zealand. First of all, do we have Edge Finder? There is no Edge Finder reading for pound New Zealand. So you entered long and the H4. Interesting. Okay, where? Was it this? Christoph, is this what you entered into? So that was Tuesday. Oh, wait, sorry, that's today. I was looking at the wrong one. Christoph, I'm not sure where you would have drawn the fib from here. Was it back here, though? I'm not sure. I honestly do not know, Christoph, where you would have drawn the fib from on this. However, what I would say is the daily and the weekly aligned. Okay, so weekly. The weekly is bullish, Christoph. You're right, but the problem I see here is just that we're in a bit of a range. So yes, we are, technically bullish. The fact, though, that we were obviously in this really clear bullish trend here with the higher lows and higher highs getting formed clear, move to the upside, that's come to an end. That's a little bit of an issue for me, just on more of a momentum and trend side. The daily moving averages here, yes, they are bullish, but again, as I say, these are very much side by side. There's not a clear direction with these moving averages. So what I mean by that is if you look over here, you can see this is well, you'll hear me say like a fanned out moving average. This is kind of what I mean when they're both sloping to the upside or the downside, and there's a clear gap between the two, like they've got like a fan thing going on. But then when moving averages begin to sort of just move side by side like this, it's often just a sign of a range, like no real direction going on. So I honestly wouldn't say that this is a trade I would take, to be honest. So yeah, Christoph, again, I don't want to burst your bubble, but there's no edge finder reading. The weekly is a little bit consolidated. The daily is a bit choppy. H4 is bearish. I personally don't like it. Yes, the Nikkei was edge finder bearish end of last week. I'm in a short position. Okay, interesting. Is the gold will go up now? I don't know, man. You tell me. How am I supposed to know that? What's your opinion on gold for today? That's a better question. Okay, so I honestly think gold is a little bit too extended at the moment. That doesn't mean I don't think it can go higher, but it does mean I think in the short term it's due a pullback. That doesn't mean it's going to have to happen. I was saying a very similar thing over here. I really thought we were going to get a bit of a deeper correction, which we didn't get. So with gold at the moment, all I'm really looking to do is draw the fib from the low to the high and see if we can get these retracements on the fib. That's really all I'm doing. In terms of direction today, it seems very range bound so far. So I would say the next leg really does that we continue higher. If we break lower, then I would be looking for that sort of deeper retracement, maybe back into these previous lows, maybe a little bit higher, retest previous highs. I don't really know, but that's the way I would try and figure that out, is just watching sort of the microstructure, if you will, just waiting for a break and monitor it from there. Hey, James, looking to short Australian dollar if CPI misses tomorrow against the Canadian dollar. If it beats Aussie US dollar longs on pullback, very nice, Luggy. Yes, I'm already in Australian dollar long. Australian dollar US dollar longs. As for what did you say? Short Australian misses. Oh, against the Canadian dollar. Okay. Actually, let's just take a quick look at the heat map for Australia. What is the inflation at the moment? Can you chart gold? Thanks, mate. You're the best. No problem. If CPI misses, that's just going to feed into that softening. Yeah, actually, you know what? The Australian dollar is doing a lot worse than I thought it was. So it's only got 20%, which is interesting. So yeah, I would actually agree with you, Sluggy. I think being short Australian dollar against the Canadian dollar could be a really good idea if, again, CPI misses. So The reason I would say that's a good one is because the Canadian dollar is getting a bullish reading. So if the Australian dollar is also quite weak, we've got a really nice relative strength trade idea there. So let's take a look at how we could maybe execute this. And also Sluggy, I like the catalyst. It's something that actually a lot of retail don't think about. But when you've got a trade idea, it doesn't necessarily have to be valid right now, or it doesn't necessarily have to come back to a certain level. You can do what is called catalyst trading, which is when a trade, you know, like Australian dollar CAD, it makes sense, but it's not on the edge finder yet. So we're waiting for a catalyst to kick that off. So as Sluggy said, the catalyst in this case could be the inflation print. So let's just see. So if we wanted to be buyers, how would we approach this? I think it's actually a little bit more simple. Fit from this low to the high. I think this is the only way I can approach this for the way I trade. But the problem I've got with this is just that we're just sideways. There's really no direction. Now, of course, this could be the reason that we actually break out and continue higher and get out of this range. But yeah, it just seems really ugly to me. Yeah, I think it's worth an attempt, Sluggy. I like the thinking. It's just yeah, not great price action here. Currently short Aussie New Zealand. Okay. Yeah, I've got to say, actually, I was pretty wrong on this one. I really did think Aussie New Zealand was going to continue higher, but it doesn't seem to be the case. Now we don't have anything here on the fundamental side, really. So I'm just thinking how we can reapproach this. Just bear with me. Because I'll be honest, I'm still not convinced that this market is ready for a complete reversion back. However, if you are short, I think you've got kind of three different ideas going on. So you could either look for a return back to sort of the high of the range. So I don't know, let's say here, roughly. So you could look for something like this. So again, a return back to the high of the range, get out. Maybe we could continue high from that point, break and retest idea of sort of very long-term horizon. You could either look for the middle of the range, or you could look for the sort of a much longer term idea, which would be back at the low of the range, which I think could happen eventually, but it might take another year or two. Worst case could take another year or two. I really don't know. But I think being short definitely has a really good asymmetric risk. I think being long is very, very difficult because the level we would be longing into is quite significant. So we go to the weekly time frame. You can see here that buyers really don't have much room to continue much higher unless we end up breaking above this level, which would require a new catalyst. Well, yeah, whatever that could be. Higher inflation in Australia, it could be the RBNZ pivoting dovish, it could be a number of different things. But yeah, I think the long idea still has potential, but it's not something I'm that interested in anymore anyway. That could change, of course. Okay, technical analysis on the DXY. I don't really need to do any because I've already got it marked up for you here. Let's go to the weekly. So yeah, that's my that's my technical analysis on the dollar. At what price do you think GBJPY long will have its biggest test? I think I'll get back to the dollar in a second then. I think pound yen has two obstacles. First of all, we've got obviously the previous highs. So here and here, I think would be sort of the big tests. But the real thing, if you're trading the yen pairs, I would say the biggest thing you have to pay attention to is dollar yen. When dollar yen gets back to either 160 and breaks above 160, then 164. But you need to be monitoring the intervention levels on dollar yen if you're trading any of the other yen pairs, because dollar yen is the benchmark, and that's where they're looking. So I wouldn't say that this is overly relevant in terms of the targets on pound yen. I really will be using dollar yen as sort of the benchmark or the measurement, if you will. I agree. I just personally feel like there can be a bit of a short squeeze coming if New Zealand dollar picks up. Oh, wait, hold on. I missed your other message, I think. I've been following some COT data, and I really like the unwinding of shorts on New Zealand dollar. Also, substantial short positions being added to Australian dollar. I agree. I kind of an experimental trade for me. I'm trying to build a strategy around COT trends. Interesting. Okay. Yeah, I do agree. I think the institutional positioning was very crowded on Australian dollar, New Zealand. So I think if you're playing on that aspect, it's a lot more valid than I was making out. So I quite like that. If you're looking for a COT strategy, though, you should look into COT flips. So it's when whichever measurement you use, whether it's non-commercial, leveraged funds, whatever it is, when they flip their net positioning, that can often be quite a big sign, because obviously they're flipping for a reason. If we've got a majority flip in net positioning, something's going on, very likely speaking. So let's say, let's say this is the baseline for long and short. So let's say institutions have been net short, let's say the dollar. They then flip here. You would want to then look for another market that's been obviously net long, and they also flip their net short. So this is a COT flip, and that's when we can often see a new trend begin to emerge. Now, obviously, COT is a little bit delayed, but it is quite a good approach. At least it can be a little bit of a confluence if you don't want to actually trade that specifically. I mean, I would never say trade that specifically on its own anyway, but that is something I've noticed with COT positioning, is when we get a net change flip, it could be quite interesting to see what comes in the following weeks. Okay, so we have about 20 minutes left, and I don't have much else to talk about. So let me just take a sip of coffee. A nice cold coffee, love it. Right, so what else do we have going on? So we've kind of covered pretty much everything. So euro is very bullish. I think euro dollar is absolutely one to pay attention to at the moment. The unfortunate thing is there really isn't much to do just yet. So I think that the trade is still setting up very, very clearly, though, which is nice. Obviously, we've got the fib low, fib high, pull back into the 50% retracement, line up with previous structure, and then continuation higher. I really think that this is probably one of the easier setups at the moment, but it's just a case of, can we actually see this pullback follow through, or are we going to just sort of bottom out here and continue higher? I really don't know. But yeah, we'll have to just see what happens. I'll check that approach out, no problem. So what was I going to say? Oh yeah. So I know my analysis is a little bit floppy doppy at the moment, but again, it's because I've been away. So I do apologize. This week I'm spending pretty much just catching up on the markets and everything going on. So hopefully later in the week into next week, I can get back to my normal standards of analysis. But yeah, this week we're keeping it relatively light. With the new UK administration, do you still have confidence in the pound long term? I've never had confidence in the pound long term. So I think the UK is in a very odd position. We've obviously got the new PM. We've got Andy Burnham that's come in, and I'll be honest, I like a lot of his policies. I think he is probably the best PM we've had in a long time so far. Now, the reason I'm saying that is because he has a lot of things that are good for the general public, trying to tackle the cost of living issues, trying to lower energy prices. So, he's removed VAT off, I think, was it gas or electric or something? He's reduced bus fares. I think he's capped them at a certain price. So there are all these things that are actually quite good. But then I'm looking at the long term, and I'm just wondering, because he also wants to increase foreign aid, which is obviously very expensive. And the UK is not doing well financially. So while these things are good long term, I'm looking at while these good things are good short term, I'm looking at the long term effects. I'm just wondering how the UK can actually finance these things, how they can cover the costs, because there's only really two ways they can go about it. They can either increase taxes, which I really don't think they can justify doing. Our taxes they're astronomically high. It's unreasonably high. So the top earners in the UK, I think they lose about 55 to 60% of their pay due to national insurance and tax, which is unbelievable. So I don't think they can hike tax anymore. There will be a massive outrage. So I think this is kind of off limits. I mean, they could do it, but I don't think it would end well. But then that leaves the other problem, or the other solution, which is borrowing more, which I also don't really think is a feasible option. So they might be forced into this, but I don't know. So I'm not taking, if any of you watching my content sort of towards the end of last year. I had the A1 webinar where I was talking about the pound situation, or the UK situation. I do still stand on that. I do still think the UK is in massive trouble. You've also got other factors, like how unbusiness friendly the UK is. But I don't think that it's a trade I can take at the moment. I think it's more a trade for the next couple of years. It's been modified. I stand on the idea, but not right now. Hey James, how's it going back on your desk? Yeah, it's nice to be back. It's the first day I'm back, so it's good to get back into routine, but I'm still very out of touch on what's actually going on. Do you have any experience with retail position flips? No, I don't actually. I've never really looked into that. I would imagine actually it's probably a similar thing. So I don't trade either. I don't look at COT data and say I'm going to take that trade. I don't look at retail and say I'm going to take that trade. But I think it would be kind of a similar idea. So let's say, again, this is the baseline for retail position. Let's say this is completely flat. They're neutral. There's no direction. So if retail, let's say they're bullish for, I don't know, a sustained period of time, let's say a couple of weeks or even a couple of months, they then flip bearish. But the problem is, with retail position, obviously with COT, they're putting positions in for real reasons, whether it be central banks, geopolitical, fundamental, whatever it may be. They're placing their positions and their ideas on something that is real. Whereas retail, they position heavily off just technicals. So that is kind of a lagging thing, really. So if if we've got a bearish trend that's established, they're probably going to be counter trading it. So we're kind of already behind if we're counter trading them. Does that make sense? So I think you would have to probably pair this with something else, whether it be COT, so you actually wait for COT to flip and retail to flip at the same time, or within a certain time span, where it's a 1 week limit, for example. That could be some sort of idea. Or you could do it in line with, I don't know, let's say the edge finder. So if the edge finder flips at this point and retail also flip, well, you probably get the reading at that point anyway. So you just follow the edge finder. But you get what I'm trying to say. So I think it's probably a similar idea, but a little bit more flimsy, I would say. By the way, this is complete guesses. As I said, I've never tested it, so you might want to go and look at that yourself. This is just from what I am thinking, basically immediately. Hi James, a short euro dollar pullback as H4 bearish, hoping to continue into support. Yeah, I mean, that's really not the way I trade, so I can't really comment on it. I don't think that's a good idea personally, just because the fundamentals don't point that way. But I do agree that I think the next likely move is down into sort of the let's say 1.162, just again for round numbers. But just because I think it's going to go there doesn't mean that's guaranteed. So as long as you've got your reasons, fair enough. But again, I can't really say much because it's not really related to how I position. Gold XAU breakout new high today. Do you think so? Yeah, it wouldn't surprise me. I think gold is on an absolute rampage to the upside. I think it's doing a massive repricing. We've had not a V-shaped reversal, but like a very, very clean reversal, really. We've had, a massive amount of downside here. Was it like a 30% discount from the highs? We've had a really nice consolidation around a really strong level of weekly and daily support, and also the key 4,000 level. And we've just bounced off it really, really nicely. Yes, we had a little bit of consolidation in that area, but it was so nice. So I think if gold continues the way it is, which I don't see a reason it can't really, I really think sort of 5,000 will be the next stop. Maybe not 5,000 exactly, it might be sort of within that area, maybe 4,800, 5,200, whatever. But yeah, I think there's a lot of points where gold could have these pullbacks, but in terms of actually like having a reversal or a trend, going even lower, I don't know, let's say 3,500, for example, I just don't see that happening really, unless what could flip that? Unless we get the Fed coming out hawkish for whatever reason, whether, let's say CPI comes out really high, Fed has to pivot a little bit more hawkish. That could be something that would obviously pressure gold. maybe we get any more really serious escalations in the Middle East, that could maybe also negatively affect it. But I think for the most part, we're kind of fully priced in. So I think really it's now a case of actually repricing what was priced in terms of the negativity, and gold now is pretty much set to continue higher. That's just my view. But again, also the fundamentals are bullish as well. So I think we're pretty much set to go. Gold up, say let's put less savings in. Okay, good luck with that. I hope you know, if you're going to put all your savings in, you may as well go 1 to 1,000 leverage as well. Why not? You got nothing to lose at that point. Okay, so yeah, I think we're kind of done actually for today. We've got about 10 minutes left. So if there is any chart requests, let me know. Again, I would like to just quickly apologize. I'm not fully caught up to the markets. I've been away for about 2 weeks. So I'm still kind of doing all this with you, catching up and doing my analysis and things. So hopefully by next week, I'll be back on peak performance. So yeah, yen pair's still bullish. As I said earlier, I would still fully be happy to buy into these pairs. The problem is a lot of them have already reverted back to, you know, respectable prices, back to sort of the highs or around about the highs. Dollar yen really is the only one that I still see potentially actually buying because it's still quite low or cheap. Obviously, it's not on the Edge Finder, so not great. However, actually, that does show you the power of the Edge Finder. You know, for example, pound yen is very bullish, and it's pretty much back to its highs. Dollar yen, not bullish, and the dollar is actually bearish, and this one's not back to its highs. It is sluggish and very slow. So if you've not got the Edge Finder, make sure you get it with code ELITE. Euro dollar. Yeah, we've looked at euro dollar about 5 times, but I will do it one more time because, as I said, I kind of run out of things to talk about. So with euro dollar, I do expect upside to be the base case. I don't really see anything that would change that. I think the only thing really I'm looking for here is obviously fib from the low to the high, pull back into 50% retracement. That would also then line up with the previous structure on the left. That would be the break, retest, continuation higher. Fundamentals are bullish for euro dollar as well. In the Edge Finder here, you can see it's got a score of 13, which is very good, very high. So yeah, I think really we're pretty much good to go on euro dollar to continue higher in my view. In the Edge Finder, the Canadian dollar is still bullish. Is this not outdated after US Canadian trade war? I don't know. Actually, let's check. I suppose it would really depend, Christoph, on which market you're actually looking at, because again, that comes down to relative strength. Yes, the Canadian dollar could be weaker off that, but then weaker against what? Obviously, on a fundamental basis or on the economic data, no, because it's not changed that, at least yet, anyway. So I would say, Christoph, it's a good point, but again, it would really depend on what you're actually looking at. Excuse me. Okay, yeah, I think we're caught up with all the messages. Okay, I was just taking a quick check to make sure I hadn't missed anything. So yeah, when it comes to the trade war, I know roughly like what's going on, but I haven't again looked at the actual context. Let me just take a quick peek and see. The Canadian dollar faces acute trade policy risk as Trump threatens 50% tariffs on auto starting January 2027 after negotiations collapsed while Q2 GDP due Friday forecast at 4%. Yeah, it doesn't seem like a huge deal, to be honest with you, in terms of immediate weakness. Doesn't seem like it's had much of an effect. Okay, so I'm just taking a quick look here. Yeah, there's nothing that's really changed. I do really like the Nikkei. As I said earlier, the downside is we don't have an Edge Finder reading, so we're a little bit trading in the dark, slightly against the fundamentals as well. But I would be willing to take it again with the high time frame trends. Fib pullback is one I wouldn't mind putting a little bit of risk on. Dollar yen is doing okay, nothing spectacular. Dollar Swiss is doing okay. It's pretty much back to entry here. Gold is fine. Australian dollar, US dollar is also fine. So yeah, actually really no changes on my positions throughout the stream. I think Edge Finder feeds only macroeconomic data or technical geopolitical whipsaw. It's much more. Yeah, exactly, Sluggy. How has Edge Finder affected your trading? Massively, actually, my friend. So before the Edge Finder, I used to have a a Google, is it Google Sheets or Google Docs? One of those ones. It's like the Excel thing that Google has. I used to use that, and I used to spend probably half an hour every day just filling it out, making sure I hadn't missed anything, making sure all the data was up to date, making graphs and charts and all this stuff. I had to do it all manually. So everything here, so things like COT, I had to go and look at the COT report, figure out what was what, and type it in. I had to go and look at all of these pieces of data individually, make sure they're all up to date, type them in every single day. It was a nightmare. And then I also then had to figure out what was bullish and what was bearish from that, and so on and so on. So the fact the Edge Finder has it all automatic, but also gives you the readings, I think is a game changer, to be honest with you. Obviously I'm on the streams, I'm affiliated with them somewhat, but I wouldn't, I bought the Edge Finder back in 2022. It's before I knew really anything about Nick. I bought it on a recommendation from a friend, actually. And that's actually how I connected with Nick in the end. So I wouldn't be here if I actually didn't use it and didn't like it. So that should tell you enough. So Eurodollar bearish short term like H4, but bullish long term weekly. So we're expecting a pullback to 50%. Basically, yes, Bills. I think you pretty much hit the nail on the head there. Yeah, so bearish short, like very, very short term into this 50% retracement, and then I would be looking for continuation. Now, when I'm saying bearish and short term, I've got nothing to support. There is nothing to back up that bearish move. The only reason I'm saying that is just because this is the next sort of natural pullback or measured pullback. Obviously, that's how I find pullbacks, is using the fib. So that's just my view. We very easily could actually just continue higher from this point. Then I've got no entry and I've missed a position. So take it with a grain of salt. Of course, you need to obviously figure out how you want to do it and what works for you. But this is just the way I trade. Why take the Aussie US dollar trade? Because at the time, the Australian dollar was doing quite well. I can't actually remember. Let me just take a very quick look at the position I took here. Just bear with me for a second. Sorry, guys, I'll just read it. I sent it out to my Discord, so I'm just reading the position here. The regional backdrop is becoming increasingly supportive for the Australian dollar. I'm closely monitoring the renewed strength across Asian FX following the recent intervention in Japan, with the yuan showing signs of resilience. Given Australia's deep trade exposure to China, any sustained improvement in Chinese activity and the firmer CNH, which is Chinese currency, could naturally translate into a stronger demand for the Australian exports, making Australian dollar one of the clearest liquidity proxies for broader Asia growth story. Domestically, the data continues to surprise the upside, to the upside. Household spending rose 0.8 in June after a 1.2% increase in May, while job advertisements increased 0.8%, highlighting continued resilience in domestic and demand and labor market. Although markets have largely priced out additional RBA tightening, these figures provide policymakers with room to maintain a hawkish bias should Q3 inflation remain elevated. On top of that, we also had, obviously, the Edge Finder bullish as well. So I think actually Australian dollar was slightly higher at the time, but it's still there, so it's fine. And I'm also just looking at the overall dollar weakness. So the US dollar is just fundamentally like really, really weak. So yeah, there you go. Very simple trade, actually. But yeah, pretty smooth so far. Also, I think actually I made that sound like that was my trade. I shouldn't have said it like that. That is not my trade. It's from one of my traders that I've got in my company. So I think, what else do we have to look at here? Yeah, we're pretty much caught up. So gold, silver, we've looked at. We looked at pound yen very briefly. The Canadian dollar, I'm not really interested in, to be honest. It's just not really got anything, or there's really not much. I think if we were looking at the Canadian dollar, the only place I would pay attention really is dollar CAD, maybe the Australian dollar CAD. But we did look at that, and it's kind of just range bound. There's not much going on there for me. So the S&P is bearish. I just realized we haven't actually looked at the S&P yet, I don't think. Just get rid of all of that. So what do we have here? So we kind of had a bit of a break and retest, actually, which is quite a bullish setup. So I'm getting a different a different bias really on, obviously the fundamentals on the Edge Finder are telling me to go short. The technicals here are actually telling me to be a buyer. So I'm in a tricky position where I actually don't think I want to do either. I'm just going to stay away. So I think there's two options really to look for a short position. I don't like either of them, so I'm not going to do them. This is more just me thinking out loud. So either we create some sort of lower high, we have this pullback, retracement into the fib, and then continue lower. That again will create this lower high, be a nice fib retracement, and so on and so on. Or we maybe get some sort of double top here. We come up double top and then continue lower, break this, and then continue from there. Break and retest on this point. So I think that's kind of the only thing I can look for. And again, I'm not going to do that. That's just again thinking out loud. But yeah, I just don't see a short setup, which is a bit unfortunate. Oh, you want the technicals? Oh, I see. Okay. Yeah. So if we go back to Australian dollar, US dollar. Let's go to the H4. So fib, low to high. Yeah, very simple. So, oops, hold on. Yeah, so fib from the low to the high, pull back into the 50% retracement, lines up with the structure here on the left. We obviously didn't enter straight away here because it was just a wick into 50% retracement, which is fine. That's okay. But it wasn't a super clear signal in my view. We then waited a little bit for these moving averages to just establish. As we started to pull away, that's when we took the trade. So it's exactly what I'm always talking about. The entry was a little bit more aggressive than maybe what you would normally see me take. But the fib was there. The trend was establishing. The Edge Finder was bullish at the time. So yeah, very bread and butter. Short answer, fundamental divergence, technical mispricing. Yeah, pretty much. Yeah. Okay, so ladies and gentlemen, it's my time to get off the stream and let Alan come and take over. So guys, don't go anywhere. We've got Alan Perez coming to take over the stream. Thank you very much for being here. Stay safe, don't get margin called, and I will see you all tomorrow. See you later. Have a good one.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is 8cap. 8cap is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in the live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. 8cap has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out 8cap if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style as well as your own risk tolerances. Thanks to 8cap for sponsoring today's content. Now back to the show.
Good morning, everyone. How we doing? Quick disclaimer here. I did switch up my setup a little bit, so I want to make sure that the camera is well and also the audio too. So let me know, guys, in the chat. Good to see all of you here. Let's see. Basically what I did was I switched my side monitors to my left instead of my right. And I have a new kind of positioning for the camera so I can see you guys. But let me know. Can you guys hear my audio okay? Morning. Sounds good. Thank you, Candace. I appreciate you. Okay. I got some tweaking to do, but this is my first live stream with the new setup here. I got a new standing desk. So I got tired of sitting all day. And so I have a standing desk now. And with that came some changes. But okay, looks and sounds great. Okay, awesome. Thank you guys so much. Good morning to you all. Good to be here. Let's go ahead and talk about what's going on markets today. Good afternoon. Good afternoon. Good morning. Perfect. Okay, you guys are the best, man. All right, let's see what's going on here. This is weird because I'm usually like so used to like talking to you guys right here. Like I used to have a monitor right next to the camera lens, so it looked like I was talking to you guys, and now I'm over here. But all right, I digress. Let's look at bond yields. I was looking at them earlier today, softer. Look at the 30-year too, getting some kind of relief here. So this was that candle This was that Scott Bessett candle here. He went ahead and said, bond buybacks, we're going to double that. Red, then next 2 days following suit, basically absorbed this whole red candle. Now we're back at the low of that red candle there. So I'm curious to see if we do have a breakdown lower, that should translate into a softer dollar, which good for me. I'm looking to take advantage of that. So you do have the 30-year lower, you have the 10-year lower as well. And you also have the 2-year yield making a leg lower here too. I'm curious to see what's going on with gold. So gold is pulling back. I know that's the asset class that we're all wondering and watching here closely. Me personally, I have in mind the 200-day moving average, as well as this level here, this 44.50, 44.25 level here as previous resistance turned into support. Most likely, I'm looking for a pullback into that level. I'm also looking at silver as well. I don't trade silver, but I'm sure that a lot of you guys do. And from a technical analysis pullback perspective, it seems like silver may present the pullback quicker than gold. So with silver, I kind of have this level in mind here, this previous resistance turn support. So you can see here, looks very identical to that gold level. You can see here, resistance once, twice, 3 times, breakout support here. So we probably will tap into this level here. And then the question becomes, is this the dip where buyers take it in and take it higher, possibly targeting the 200-day moving average, or does it continue lower? So we'll see. We'll see. But silver does seem to present that pullback opportunity quicker than gold. You see gold has some ways to go. So I'm watching that. Oil, though, oil here down, what, 3.5% today, which is really, really good. Love to see that. That's definitely going to help fuel the yield story, the dollar softness story. And I would imagine that oil is really doing most of the heavy lifting here on the yield side of things for this morning. So with oil down 3.5, I would imagine you see some follow through on yield and the dollar. So the dollar is actually green on the day, getting close to that 200-day moving average, which I'm watching closely. In fact, one would argue that it pretty much got there, depending on what kind of chart and settings that you have. So with that being said, I am very looking forward to shorting dollar Swiss. So dollar Swiss here, I do have the 50 and the 38.2% retracement fib levels. Prices now in between them. Also this level here, previous support, possibly turn resistance. It seems like it's doing its thing here. So I might go ahead and short this now from a limit order perspective. Let's see, we didn't quite get there. So I have the limit order at the 50% retracement level. We missed it by a hair. So we'll see. If we have some follow through, then I'll just market order short and trail with structure there. If not, so be it. I'll just let it keep breathing and taking it higher if it wants to do that. But it seems like as of now, we're pretty well positioned for a leg lower with oil lower, yields lower. I like to see that. You also have equities higher today on the day too, so you have a clear risk on day. So yeah, let's see what the euro dollar too. I'm sure euro dollar was nowhere near close. It was kind of close to my buy limit order there at the 200-day moving average, 38.2. Not quite there. So we'll see. We'll see what happens. Still too early to tell, right? I'm not gonna jump the gun here just yet on the stream. You could definitely continue pushing lower, and in that case, my limit orders get tagged. If not, if you start to see a kind of V-shaped recovery or a recovery to the upside, then I'll go ahead and see how I trade that. But for now, I'm just gonna be patient with it. Let me see what the you guys are funny. Nice side profile. Thank you, man. Appreciate it. I made a post on the A1 Discord on bonds market. Look at gold 1 minute. What are you seeing on gold 1 minute? Yeah, let's go to gold 1 minute here. Let's see, gold. Let's do 30 seconds, shall we? Might as well get crazy. We're going down to the 1. All right, let's see. Gold 30 seconds. I see a drastic sell-off here. It seems like gold is plummeting. You can see this whole thing. Look at this, guys. You can see this right here. Gold on the 30-second chart. It is crashing hard. It's probably going to zero. However, if you zoom out to a daily chart, you can see how insignificant that is. It doesn't even show up here, guys. I'm doing this for illustrative purposes. You can't even see the box that I drew, right? This is the box right here relative to the 1 hour or 4 hour. I'm sorry, even worse, 4 hour chart. That crash that I saw, don't even see it. So with that, I say zoom out, go to the higher time frames. You're inviting a lot of noise if you go to the 1 minute and 30 second. But that's just my opinion, though. That's my opinion. All right, let's see. CO on the move, oil on the move. Definitely, man. Definitely. It's over for gold. GG, gold crashed. We're doomed. Nah, man, we're not doomed. We're just getting started. Gold crashed. Yeah, man. I mean, I could see that. I could see why one would think that, right? Like you see this right here on the 1 minute and you're like, "Oh my gosh." But nah, man, in the grand scheme of things, if you just zoom out, it's really nothing. It's really nothing. With gold, guys, genuinely, I think that the way to go would be to be on the higher time frames and widen those stop loss. I see lots of noise in gold when you go down to the lower time frames. And I just wouldn't want to trade that. All right, let's see. What else could we look at here? As far as developments go, I don't really see much. In fact, I should have done this. I should have brought a Google Chrome into this tab, and then I'll fire up all of them here. We'll go financial juice, edge finder, we'll do currency strength, and we'll do Forex factory. The good four. All right, let's see what's going on. I know we had some Australia stuff going on too. Let's see. CPI, that's tonight. Australian CPI is looking to tech higher from previous. Oh, that's month over month. My apologies. CPI year over year in Australia is looking to tick lower, which is interesting. Okay. If you were to see a lower CPI in Australia, I would imagine you do get some softness there. Coincidentally, you are tapping into some major resistance here, right? So we all know currencies, they are for the most part range bound, mean reverting things. So if you were to tap into this level of resistance, you get a catalyst that brings it lower. You're just back into good old range trading on the Aussie dollar. So with that, if you do have that cooler CPI, then I would expect likely pullbacks. As far as how far, that I don't know. But if we measure this recent leg here, assuming that the price action stops right there, pull back into the 38.2 or the 50, lines up with previous structure right around here. That's kind of what I'm looking for. So if you guys are buyers of Aussie dollar, this would be the way to go. Likely a pullback into this previous support or previous structure would be quite wise. But again, that's contingent on if you have a cooler CPI for Aussie. If you have a hotter CPI, well, that changes the story. At that case, the question becomes, do you have enough momentum to carry this across this level of resistance? In that case, I would be waiting for a break, retest, continuation higher. And have we broken out of this in a while? Yeah, we have. So if you were to break out, then you really raise your targets to something like 0.75, 0.6. And you know what? Aussie in recent times here has been range bound, but I wouldn't be surprised if you do get a breakout above this level and you just continue higher, right? Especially if you have the bond market talk, yields lower, you have oil lower, you have, in recent times in US data coming in cooler when it comes to inflation, CPI, PPI, PCE, labor market, right? The latest NFP report was weaker. So you do have a pretty good storm here for Aussie where if in the event that you do get a hotter CPI, this could actually fuel this and finally break out of here. And then at that case, you are looking at 0.75, 0.76. So that does make sense. Also, too, considering that my personal bias is dollar to the downside, right? I do think that the dollar has more room to go. So even if you have a somewhat flat CPI, if it still stays elevated, if it's still at, what is it right now? 3.8, I saw. Let's see, Aussie CPI. Oh, yeah, it's currently at 3.8. If it stays there, but then you do have the dollar side of the coin, which is continuing it weaker, that could still add fuel for Aussie dollar to the upside. So really the question is, do you see extreme softness in Aussie CPI? At that case, then you start to question things. But I feel like if it comes in flat or if it comes in hotter, you have a position where Aussie continues shooting higher as long as the US side stays weak. That's really the only thing that I'm looking for. When it comes to other countries, let's go ahead and go back to Forex Factory. We have PCE on Wednesday. We have unemployment claims. We have Jackson Hole on Thursday as well. We'll see what happens there. Tokyo CPI, which is what is that? Supposed to come in flat. Then Canada GDP and day 2 at Jackson Hole on Friday. Okay, cool. Let's see. Gold crash. I was just joking, man. I was just joking. You guys know me. Alan, good point to enter silver now. Look, not financial advice. I would never tell you when to buy silver or when to not buy silver. I'm just saying that I am waiting for pullbacks on the metals, right? Me personally, I'm not going to touch silver. I would prefer gold. All I was saying was that silver seems to be presenting the pullback opportunity potentially a lot faster than gold. So with silver here, I'm looking at a pullback into this previous level of resistance, possibly turn support. So I'm going to turn that green. You can see here that we are pretty close to that. Whereas on gold, I'm waiting for a similar level, but it seems to be farther away. That's all I was saying. But as far as one or the other, I prefer gold. So I'm just going to wait for gold. Hi, I'm learning to trade with Footprint. If you don't mind, I have a question. I can decide what time frame works better with Footprint. Right now, I have it on 1 hour. What is your opinion on it? Footprint. I think you mean like the what is I think I know what you're talking about. Is it like Bookmap, right? Trading Footprint. Yeah, I'm pretty sure it's this thing, Footprint charts. Dang, man. This seems to be like a very price action heavy type of approach. So with that case, anything like that, when you're looking at order flow, like level 2 data on like an exchange or whatever, likely than not, the strategy is like on a lower time frame, right? Because you're trying to catch discrepancies in the price action. But what am I looking at? Ball out. Your question is as good as mine, man. What positions are you currently in? None. So I am looking to enter dollar Swiss short. I can show you here my limit orders. I have dollar Swiss short ready to be executed and euro dollar long. And with gold, I don't have a limit order, but I am looking to buy gold. So these 3 positions I was in already, and I got taken out for a profit when euro dollar hit the 200-day moving average with dollar Swiss. I took it out manually, and then gold, that one took me out. Gold was frustrating, guys. I had a position here. I moved it to break even. I got taken out, and now we are up. How much are we up now? We're up 6%. So it is what it is, but that one did leave without me. Let's see. How are you looking to position ahead of Friday? Ideally, if I get my levels hit, I'm looking to take those. Not really too concerned about holding into Jackson Hole or anything like that. It is what it is. I really don't expect much from it drastic. I mean, we've seen lots of things getting thrown at the market, right? You have bond market talk. You had Scott Bessent yesterday about the economic D-Day on the extra sanctions on anyone doing business with Iran, trying to give everyone a chokehold to potentially get them to the table. Lots of things thrown at the market. And it seems like it's moving pretty quiet. So I'm really not too worried about Jackson Hole, to be honest with you guys. In fact, let me look at a CME Fed Watch tool to see if anything has changed on the rate side of things. So it was a little bit wonky yesterday. Let's see. Probabilities, okay, it fixed itself now. So we're just back to old, one rate hike, one and done type thing. That's still on the table. Me personally, I do think that the longer that the Fed is like deferring this, the more they're trying to get into like a no rate hike, just hold for a very long time until it's ready, until you have the green light from the data to go ahead and start cutting rates. So to answer your question again, what am I looking to do? How I'm looking to position ahead of Friday? Ideally, I get tagged into euro dollar long, dollar for short, gold long, and I just stay in that and just let it ride out. But I need for it to get to my levels, or I need to see some sort of like confirmation on the price action. But until then, I'm just waiting with a lot of you guys. In fact, I would ask you guys, what are you guys waiting for? Are you guys already in positions? Did you guys get in prematurely? Is there something that you guys like over the other? Dollar CAD short looks pretty good too, I will say, from a technical perspective. It's one of the charts that is giving you that technical pullback. In fact, if I just do this, a super basic like trend line, does that work? Yeah, that could work, right? Trend line there, bearish trend line. You're tapping into what could be support and resistance. In fact, I'll turn this red here, and then you are tapping into the 200-day moving average as well. So that could be a good one too. Dollar CAD, that one. I mean, this is a clean trend here. So and it seems to be going quite well. So dollar CAD could be a contender as well. I like dollar Swiss short just because we saw some really, really strong momentum to the downside that one day, and I want to continue catching that. But dollar CAD too is a really strong one. In fact, on the Edge Finder, which if you don't have the Edge Finder, definitely get yourself a copy. This tool right here, if you're new to the stream, this does all of the sentiment fundamental analysis, does it for you, it puts it all together, and it gives you a very solid score. And if we look at the dollar crosses, you can see that dollar Swiss and dollar CAD, both of them are getting a bearish reading of -11. So I really do like this one too. So again, it's just a matter of seeing what happens. I'm looking at DXY, right? We are tapping into, or probably tapped into, that 200-day moving average. So if you continue downward pressure, similar to like how people trade single stocks and they reference the index, right? If the DXY starts pulling lower with some follow through, then I would look to maybe manually execute these positions. But if not, then I'm just going to be waiting for my limit order to get hit. Alan, your gold trade was a monster. Are you still in it? No, I'm not in it, man. I'm not in it. I got trailed out, and as soon as I got trailed out, it started to do what it does best. And so I'm just watching from the sidelines like many of us. Alan, no one's talking about Bitcoin again. I think it's bullish. Please check it out on the Edge Finder. Let's look at Bitcoin. Look, I'm not a Bitcoin expert by any means necessary, so I'm not going to sit here and try to give you a good breakdown analysis, but I will say from a technical analysis perspective, you have it potentially in a range, right? You popped above the 200-day moving average. I wouldn't be surprised if you see, let me see if my Epic Pen works. I wouldn't be surprised if you see Bitcoin reject this level, right? And then the question becomes, okay, are we back in a range again? And then what I would be looking for, if it does reject this level, is what happens when it gets to that 200-day moving average, right? If you find support at the 200-day moving average, well, then maybe we're trying to break out of here. And if you don't break out of the 200-day moving average, then likely you are back into this range trading motion with Bitcoin. I will say, though, it was very sensitive to what was going on with the yield talk. So with yields lower, Bitcoin is liking that. In fact, today, Bitcoin, or the yields are down across the whole curve, short and long end, and you have Bitcoin pretty close to this level here, the top end of the channel. So we'll see. I'm curious to see if yields continue lower, if Bitcoin does one of this, where break retesting continues higher. That I'm curious to see. But with Bitcoin, you guys know me. I was looking to actually short Bitcoin once we tapped into the 200-day moving average. I hesitated because we came into here with lots of momentum. I'm glad I didn't execute, and we just broke higher. So my kind of trade idea was disrupted. So with that, I'm gonna sit and watch. I'm gonna spectate on Bitcoin and see what happens. But I'm not too interested either in participating. Right? I have my mind elsewhere. I have my mind on the metals. I have my mind on currencies at the moment. I'm just watching that for the most part. What's your entry price on gold? Again, I'm not in gold, but I did buy near 4,000 or shy of 4,000 at one point. Let's see. Saw says just hold gold and silver till year end. You don't have to trade and watch the intraday moves. I think there's still a case to be made where gold, like we're seeing gold do this right now. We're seeing gold do this. In fact, we're seeing gold do this. But I still think that you could still see gold do this, right? I still think that gold could do this, right? I'm not too convinced yet that gold is going to reach all-time highs. Are we seeing that story develop and get stronger? Absolutely, right? But I don't think that the case to be made is a certain revisit to all-time highs, right? We have to remember what got us in this environment here, right? This environment was central banks around the world looking to cut interest rates, and that is still a question today. So we are seeing yield talk. We are seeing bond yields lower. You are seeing oil slightly tamed. But again, remember, we still have the Middle East stuff unresolved, right? What did I do to my monitors? Hold on, guys. I think I tripped out something. They just went dark on me. Oops. This goes here. Oh, I think one of my monitors shut off. Uh-oh. All right. What's going on? they reset? Guys, my screen is like pulsing right now. Let me know if you can hear me okay. My monitor to my left is out of there. Okay, I think it came back. Is it coming back? Please hold. All right, James. My bad. I'm just gonna. Whoops. I swear I didn't touch a thing, guys. Do you guys see my screen moving the way it is? It's like not letting me do anything. Let's see.
All right, guys, I'm jumping in for Alan here. He's got some technical difficulties. No worries. We'll let him get it sorted out. Hopefully you guys can hear me and see me okay. Alan's new stream setup. He's still perfecting it, but I'm sure he'll get it sorted out, be all good shortly. But we'll bring him back. He'll be back for his secondary segment here in just a little bit. Just continuing on, I had to jump in, so I wasn't fully listening to everything Alan was doing, but I'll just jump into wherever I was looking at this morning here, and we can get started. Indices are moving higher here this morning. You've got the S&P 500, Nasdaq, Dow Jones, all in the green today. The Russell also green. Japanese stocks also higher. The HSI, it says China, flat. Korea also positive here today, and European stocks also in the green. So a bit of a positive bounce back for equities here. Simultaneously, we had precious metals continuing or starting maybe a little bit of a pullback. We'll see if it goes anywhere. I heard Alan was talking about this for a little bit, this concept that you may be seeing a start of a precious metals pullback, but it's hard to say because you've had a couple of these little stuts and starts where they look like they may be producing some kind of a pullback just in time for price to continue to move higher. For me personally, I am interested in pullbacks in both silver and gold. But like I said, I'm not holding my breath on these because they have been tricky to try and wait for a proper pullback on. So with that said, if I can get some kind of retracement on gold, maybe the 45.25 level, silver, I'd also be looking at the 61.8% retracement. Some kind of rally up in the dollar could maybe help out with that story. And look at oil here this morning. I didn't even notice this. It's got a big mover here to the downside on oil here. So I'm not exactly sure if there's a headline that came out this morning. I imagine probably with such a sharp move lower in oil. We've also got copper here slightly positive, natural gas lower, and Bitcoin also maybe just slightly pulling back. This one's been a massive runner here recently, and we will have to see if that can continue at that rate or if maybe we're going to bump into some resistance here around 80,000. The other thing that's been interesting, we'll talk about it, I'm sure, is what's going on in the bond market. Bonds continue to generally see yields moving higher, although U.S. Treasury seems pretty committed to defending where we are in terms of the long end of the curve, bond yields. The strategy seems to be borrowing at the short end from the Fed or from the Treasury, and then lending out and buying long duration bonds as a kind of supportive measure. There's a whole bunch of drama with the Middle East stuff and the idea of kind of starting another wave of economic warfare between the U.S. and Iran. But it's more so the big read out of that story, in my personal opinion, is really more the U.S. indirectly kind of challenging China and their help and interaction with Iran, specifically calling the operation kind of like an isolation, like a what they put a name on it, operation like outlier or something like that, or misfit or outfit, I don't know, but there's some name they put on it. But anyways, the idea is that they're going to kind of isolate Iran, put the pressure on economically as much as possible, and we'll see how it all plays out. I think I've kind of compared this in some ways to the tariff stuff that we saw a while ago, where it's like this effort to sort of control global trade. And we'll see how the market reacts to it. Last time, when you did get the tariff, and we do also have tariff news to discuss as well. You have all sorts of stuff going on that could potentially be some kind of a risk event for markets, especially depending on how China responds to it all. So you do have more stuff heating up and a lot of economic data this week, as well as NVIDIA earnings. It's going to be a big one. Real quick, we'll play a quick break here to transition. We're going to bring in Marilee. She's coming on for more macro conversations here. We'll be taking a look, I'm sure, at a wide range of markets and how things are moving this morning. So don't go anywhere. Stay tuned. We'll be right back with Marilee joining me here on the show. Stay tuned.
If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
All right, and we are back with Marilee. Hey, Marilee, how are you?
Hey, good. How are you?
I am good. We've got like so many things this week in terms of potential market catalysts. You have the Federal Reserve, you have NVIDIA, you have economic data, and now this whole US-Iran Treasury stuff. What do you think stands out? Like, which of those things is maybe top of mind, most interesting to you this week?
I would probably say the equity part. NVIDIA is my main focus, and really kind of what's happening around NVIDIA. Obviously, there's earnings tomorrow, but I don't know if you were watching this, but I was watching the kind of the correlation between the dollar, 30-year yields, and then the Nasdaq yesterday. Let me see if I can share the screen.
Yeah, no, they've been really lockstep sensitive to one another, right? Like you've had yields moving one way and stocks and equities kind of reacting sharply. What have you been finding there?
Yeah, so I was watching just yesterday, and obviously today's a little bit different, but it's like the day before earnings, so it's kind of, and obviously I'm looking at the Nasdaq, not just NVIDIA, but when the 30-year yield goes down, typically that's good for like long duration tech, right? When the oil goes down, recently in recent past, when oil goes down, stocks tend to perform better, right? The dollar was it wasn't like necessarily rising. It was basically flat yesterday. It went up a little bit, but all of those things tend to point to generally positive for equities. And yet the Nasdaq had a red day. So it's like those types of like mismatches that I'm like, is it because of just the uncertainty? Is it just because of, prior to earnings? I'm sure it's largely because of a lot of uncertainty with not only that, the sanctions you were talking about, is China going to retaliate? Because literally they're just calling out China without calling out China.
Right.
Like China buys 90% of Iran's oil. So it's like they're calling them out. So are they going to retaliate with, rare earth minerals and energy thing? Like, what's going to be their response to that? Because likely they're going to respond in some way,
Yeah,
so
and it's
a whole
and
lot.
the tariff drama is kind of multifaceted at the same time, where they've got like fresh, all sorts of drama with Canada as well, promising all the different manufacturing and automobile stuff, imports and exports, kind of getting another paywall kind of added to it in terms of that relationship. So markets, the last time we had this kind of tariff drama, they generally really did not like any of it, right? This is going back to when tariffs, if you guys can remember how long ago it feels now. This was the tariff tantrum, is what a lot of people called it, where you had a lot of uncertainty about Canada and Mexico and China and all these different relations with the U.S., where trade was going to get severely kind of policed with the tariff stuff. And now we see markets have rebounded sharply. And then more recently, there was kind of the announcement from the Supreme Court that the initial round of tariffs were deemed illegal, but now it seems like the White House administration has found new ways to still put on tariffs if that is something that they want to do. And it's interesting because the reaction to it, anytime you have like kind of a freeze up on trade, can be an interesting one. Markets generally like the free market concept. However, this whole U.S.-Iran situation spilling out into economic warfare with not just Iran, but with Iran supporters, it's kind of in the same wheelhouse. So if China does retaliate, that could also be like kind of our next big story that we're watching unfold. And I do think that could be a cause or catalyst for some pretty big volatility in markets. So we'll have to see if that spills over. You also mentioned NVIDIA being a top of mind here for this week. I think it's a fair conclusion to say that NVIDIA, yes, their earnings are important for the specific stock NVIDIA, but I was watching a video last night just kind of going into detail about how integrated everything in the stock market rally really is tied to AI. Whether you are trading at this point a tech stock or a utility company, it's all kind of attached at the hip to this narrative around AI. So NVIDIA earnings are really important, not just for tech stocks and semiconductor stocks, but for the broader market itself. So I do think that's probably a good reason to maybe call it one of the, it's probably, for me, I would say Kevin Warsh, if he were to say anything surprising, that may be the more market moving event. But NVIDIA certainly holds a lot of potential to drive a lot of names higher or lower on what happens.
Yep, I 100% agree. It's well, and it's also like, one of the largest weightings. And so then we're talking about index movement, and then we're talking about, hedge fund positioning. If you get large enough hedge fund movements, things like, or large enough index movements, there's just a lot that goes with it. But I think, one of the most important things that a lot of people have been watching with these, large tech companies and their earnings is, are they monetizing, right? Are they monetizing how much they're spending? Are their valuations justified, right? To me, that's probably what I'm watching most with their earnings is like, are they monetizing how much they're spending? And I don't know the details of this, but I briefly read or saw somewhere that NVIDIA is essentially borrowing against their own GPU chips. Have you heard of that? I can't remember where I saw that. I need to dig into that deeper, but it was on the line of like credit and how, credit's being taken out to fund this. And it's essentially what I saw was they were taking credit out against their own like GPUs. So I don't know details, but I remember that.
Yeah, I don't know the specifics of that particular case either, but I'm sure probably most of us have seen the charts that look like this, where it's like, multiple companies and they're all, dealing with one another. And this is all the AI, kind of circular financing is what the people concerned with it, right? You have like OpenAI, you have NVIDIA, you have Oracle, you have all these different Google, Microsoft, the hyperscalers, you have all these different big companies, and they're all making deals with one another. I do think that the thing with AI that is most interesting to me is that when you actually like dig deeper into it, I think that there is a lot more leverage. You can all sorts of different deals and financing within these companies to one another. But I think ultimately one way of just thinking of it is that they're super leveraged and super dependent on one another to continue to delivering. So that makes even more of a case for why NVIDIA like has to see continued, feverish demand for their product. And it's like you said, you want to start seeing from the buyers of all of these chips. I think people are getting more and more demanding of like, okay, where are we going to see ROI? Where are we going to see, gains? I heard a really interesting way of thinking about AI, which is towards the end of like the railroad boom, when they were building tremendous amounts of railroad. It was a very, powerful technology when they were building railroads for the first time. I think it was like in the early 1800s. They're building all these railroads. People are investing tons of money into building these railroads, and for a good cause. These are game-changing, powerful technologies to move people and product all around the world. This happened in Europe. This happened in the US, happened all over. But anyways, towards the end of this, people piled in investment. People were happy to invest in railroads. But I heard that like towards the end of that boom cycle, people were piling in investment to build these very expensive train tracks out to rural places that had kind of no reason to bring a train out to. And that made me think like very much about like with AI, humans, we do something interesting where we kind of like overbuild and we like sprint to the finish line of like how much demand there is for something well before there is something ready waiting at the end of it. So, and that's happened with many technologies like electricity, the internet. And I think that it poses a really simple question. Is like, are we in a bubble? And I think that the fair answer is like, probably yes. But the second half question to that is like, but where in the bubble are we? Are we like 1/3 of the way before it pops? Are we really close to the pop? Because if you try and call the top on AI, if you're like, oh yeah, we're totally doing that. Okay, well, you could be right that we're totally doing that. And NVIDIA and all these names could rally another 200% before we blow up. So it's like so difficult to play. I'm wondering how you think about that, like within your own trades, your portfolios. How do you kind of like manage that? And where do you have a guess on how far along within that kind of cycle we are?
Well, the hard part with that is like the underlying, like kind of like if you think of your story of, the railroads as a bubble within the railroad investment, right? That's accurate. The railroads still are used though. The technology, the infrastructure is still used.
Yes.
But the profitability of those companies, at least in that, obviously it's very different now, but assuming like in that time, those companies that were building the railroads probably did really well. And then they probably had a pretty sharp drop off right after that. You know what I mean? That bubble burst, but the technology was still being used. Just the valuations of those companies is what ended up dropping. So I think we're probably in a very similar spot. I agree with you. I think the administration is going to run the economy really hot until it just can't. So
yeah,
the timeline
I think that's fair.
It's like I would like I've been kind of leaning towards 27 as like mid 27-ish as kind of like, all right, we're probably getting a little close. If not, maybe a little before, maybe a little after. But I mean, it's for me, I like to watch cross asset correlation. I don't know, I'll share my screen really quick, but I use I created a dashboard, but it essentially tracks the correlation between the bond market, the currency market, and the equity market. So the S&P, the 10-year, and then the dollar, right? And are they correlated? Are they moving synced up together, or are they moving separately, just each one trading their own story? And typically when they're trading their own story, obviously those macro moves are really hard to kind of like, they're not moving in the same direction. And so it's hard to get like a sustained trend going. And so like recently over the past, you switch it, but 21 days, 10 days, they're all kind of the same. 42 days back is 26, 10 days is like a little bit less, a little bit more. But either way, we're very low of correlation between a macro driver moving markets synced up. And so what I'm specifically watching is I want this correlation to start moving back up above 40 into the 50s so that I can say, okay, well, there's clearly a single macro driver that is pushing all of these things, not necessarily in the same direction, but correlated in the same, like synced up. So I don't know if you ever think about that, but that's a lot of what I'm watching is like when we get to that point where the correlation between these three markets is syncing back up, what's happening then? Are we moving in a running it hot stage? Are we moving in a markets are crashing because China's attack? Like, you know what I mean? Like, what's happening at that point? Because right now there's so many stories that are being traded by each market separately. And so it's hard to get like a long-term read, in my opinion.
Yeah, that makes sense. And it kind of goes to the narrative a lot of times, like with macro or fundamental analysis or valuation of a stock, these forces that are sort of like slow moving and in the background. There are times, and I personally am kind of glad that this occurs. It gives me opportunities where I like to think of it as like the macro or fundamental analysis and the technicals actually diverge briefly from one another. Like sometimes, let's say that a story is arguably pretty bullish on a macro front. Like you analyze it, you're like, okay, this is really bullish for a stock or for a whatever, commodity or the index, etc. But then you get some kind of short-term catalyst that like redirects attention off the macro, right? Like geopolitics or something the president said or whatever. And then suddenly you have this opportunity where the technicals diverge from the macro and fundamentals. And that's where I think a lot of times the opportunity is trading that, return to one another, right? The kind of coming back to the macro and fundamentals. So I think that's a really interesting point. And studying those correlations is a good way to kind of visualize that and add some kind of, chart to that theory or that thesis. Because yes, you're right. Like there are times where the stock market feels like it is really paying attention to one obscure story every single day, constantly. Like we talked about the tariff drama or the Iran drama, like that stuff. The other way of thinking about that is if you're looking at Micron, for example, Micron will have days where it's like down 10% or up 10% or down. Is the actual underlying business changing by 10% value every single day? Not really. It's just that valuations, speculations, investor sentiment is changing rapidly. And so as traders, it's kind of cool that there is that opportunity to be like, okay, with macro, with fundamentals, with valuations, whatever you're choosing, whatever you're trading, you can apply some logic to try and figure out roughly what this thing is maybe worth or where it may be headed. And then from that perspective, you can still look for opportunities when they arise. So I think that's kind of a cool way of thinking about that.
Yeah, I think the divergence, like you just said, between the macro pointing one direction and the technicals because of a headline or earnings or something like that pointing the other direction that's exactly what I look for when I take trades, is a mismatch between what is actually driving markets and what the market is perceiving as important in this moment that will eventually dissolve and resync up with what the macro is actually doing.
Yes, I totally agree. And that's oftentimes what we're looking for in terms of trades that I'm looking for. One thing I'll look for example in gold. Like I generally think gold is bullish, but let's just say that something happens. I don't know, some geopolitical event, some worry, some margin event. I don't know, some short-term freak out headline. People will ask me all the time. I'll take a trade in the midst of that. And they'll be like, Nick, but this headline just broke. And I'm like, well, yeah, that headline breaking is what's giving me a chance to actually take a trade. Like it's so easy to get caught up in that developing headline, whatever is currently scaring the market. Sometimes it's scaring it for a good reason. Doesn't mean I'm right every single time. But a lot of times when you get some sort of spike, volatility, worry that is new to the market, that I perceive as not necessarily going to dramatically change the underlying macro story, I love that. I'm like, oh, that's awesome. Like now I can actually get a chance. Like people have been asking me a lot because I've been pointing out, like I'm looking for retracements to buy gold. Like that's a simple trade that I would like to be long. I think the macro supports gold continuing to trend higher. That's my thesis. But then people will say, well, Nick, then why don't you just buy it? Because there's nothing right now that will get gold to go down. First of all, we never know what the next headline around the corner is going to be, right? Like in theory, yeah, you're right, but like something could change. So let's just say something does change. I don't know if it will. I don't know what could it be, but something could suddenly short-term change that narrative. and get people to sell out of gold, people to freak out, sell gold, etc. And as long as the macro thesis is still holding, that would give me a chance to maybe buy the retracement. So I actually invite headlines and new information to kind of get traders and investors to move stuff around.
Yeah, I definitely agree. What do you think about how far the administration, the Treasury will go with the 30-year and like trying to, I mean, it retraced the move almost the entire thing the next day. Now we're coming down a little bit, but I'm curious, like with, we've talked about how much growth and, underlying, investment with CapEx and things like that is pushing the yields up in general structurally. Like, I'm curious how you think the buybacks will impact that.
Yeah, I think like almost a contrarian take is that I actually think that there might be legs to this actually rolling over more, which is, I say it's a contrarian take because I feel like on one hand, I understand the narrative. A lot of people are like, this isn't a good look and that it's ultimately going to just be shrugged off and they're going to continue. I don't necessarily think that it is. So here's my long story short answer. I think that Scott Bessent, he's a very smart dude. Whether you like the administration or not, dude's really smart, has a lot of market experience. And I think that he's thinking that long duration bonds are actually undervalued. And that I think he's a trader. He is a bond trader. So I think he's like thinking that anyways. So he's stepping in, taking that opportunity to effectively buy bonds. And I think that when I actually look at like the macro story a little bit here for treasuries, I don't necessarily think it's like the worst idea ever. So from a fundamentals perspective, thinking about it, you have inflation that is not necessarily in a good spot, but more tame than people had anticipated. Economic growth has been showing some softness. These are, by the way, these are bullish things for bonds. When you have the economy slowing, if there is any worry about growth that's maybe creeping in, people, historically speaking, generally buy bonds. Like bonds are, if you're thinking about like, if I told you the recession was coming, people would buy bonds more than they would buy tech stocks. Like in that moment, they would flip to, okay, bonds, even though, yes, US national debt, et cetera, well, that's still a safer place to hide out. This is kind of a cash equivalent to an extent, as opposed to being long tech stocks if you do see some sort of slow in growth coming. Simultaneously, jobs weaker than expected, ADP, non-farm payroll, JOLTS job openings, these numbers slightly soft. So I actually don't hate the idea of if you get some kind of sustained, I don't love the price action right now, but if you were to see some kind of sustained rally in something like TLT, I've got a couple levels marked. If you get this kind of move, a breakout, I think there actually may be a little bit of room for it to rally. I think it's a contrarian take because I see most kind of thought processes being, this is currency intervention. The market's not going to like this. They're actually going to freak out about it. But I think the willingness to deploy so much capital could at least short term cause yields to stay here. I think it is like number one priority for Treasury and for the administration to keep yields under control. Because if yields rip higher from here, it is a victory for Iran because it is their pressure point, right, on the US. It's like, if we can get yields to skyrocket, it's going to really hurt the administration. People are going to hate it. Gas prices, all this, and it's going to hurt the midterms, and they're going to be forced to come to the negotiation table. So I think there's a active effort to try and support the long end of the bond. I don't know if we'll see it be successful or not, but I lean towards thinking like we actually could see maybe a short-term bottom here. I don't know if it's the bottom forever. Yeah. And I think that if you're more like thinking the AI story is going to crack, if this thing rolls over harshly and you see bond yields rise through the highs, yeah, then it's problematic for tech stocks. It's problematic for the stock market at large. But I don't know. Do you think differently? I invite open discussion on it. Whatever you think, let me know.
Yeah, no, I would say I'm more of the belief that like we may have another low made. Like I don't necessarily think. Sorry, I'm not used to like doing screen sharing. I usually just have mine up the entire time. But I think we could see a low made, right? Obviously, like if you think of trend, right? This is just higher highs and higher lows all the way since like 4.8.
Yes.
Since June. So like, could we come back and like maybe hang out around here? Sure, absolutely. My longer term view with that though specifically is like we may come down, but I think we'll stay in this like wider range.
Yeah.
Like in my opinion, I don't think the administration will let the yields get to like new highs aggressively. Obviously they've made that a priority. Clearly their other priority is to do anything and everything in their power to win the AI race against China. In addition to everything else, obviously there's a whole lot of warfare in different ways that's happening with China. But lowering yields, taking pressure off of, these tech stocks, these companies that are building the infrastructure for AI so we can win it, you know what I mean? There's a bunch of stuff, but it's just, in my opinion, like it's going to be a mid to short term help. Even more so if it ends up being supportive of those companies, growth is going to continue to rise. So it's like it's that weird tension, but to me, I largely think we'll move sideways from here. Maybe make a low, and then we'll probably have a wide range that gets made, and we'll just stay elevated.
I would agree with that. I think that's a good take on it. Like from a trend perspective, it's recently been trending higher. I think you're showing signs of maybe starting to roll over a little bit here. But I'm also kind of allergic when I can be to generally like big predictions. Like I have found that it's just much easier to sort of just trade what's happening. Like I asked you some of the hardest questions in the world earlier, like, oh, by the way, when's the AI bubble going to break? I have no idea. Like from an actual trading perspective, I have no idea. I just like to ask people the hardest questions that I won't answer. But from a yields perspective, like I think that is a generally healthy take. Like I wouldn't say like, oh yeah, I think yields are going to blow out massively, but I also do not see yields having a crater lower unless something goes terribly, terribly wrong. Like that's the only scenario where I see, if they got what they wanted to an extreme, it probably wouldn't be for the right reason. It'd probably be the tech market's completely blowing up and people are like getting out of everything and just getting into bonds as a place to park in the meantime. But I think that that's a fair take, in the idea that, okay, they're very adamant about supporting the bond market, but there is still ginormous national debt that they are, piled on. You have China selling U.S. treasuries. You have Japan kind of in a bind and unable to buy as aggressively U.S. treasuries. Like there's real forces that I think are longer term forces that are upward pressuring on long duration, U.S. treasuries. So I think that there's an effort right now that could continue to keep bonds muted from seeing much higher yields, but I'm not necessarily willing to say like, oh yeah, bonds are in a huge uptrend now and yields are going to be in a massive downtrend. I think that there may be some short-term rallies for bonds, and I may trade that momentum, but I have no idea how far, how long, etc. It's why I like using a trailing stop in general, because it doesn't require me to make some kind of a big prediction of where I think it's going. I just can say, right now, I can see short-term conditions that look prime for maybe a breakout and a continuation higher on something like TLT. And if I'm wrong, I'll just stop out and I'll get out of the way.
Yeah. I mean, I think the administration is not going to stop spending, right? The deficit. And I think that was a really smart move on Besant's part, because they're not going to, if they were to, increase deficit spending in order to, like the Fed, like print money to buy these bonds, you're expanding the money supply, which, you're printing more debt, which is a problem. That's partially why the yields are going up, but they're just changing the duration of the debt. But I think either way, it's weakening the dollar, which is a benefit also for China, right? If the weaker dollar against the yuan makes, harder for China to export, right?
Yeah.
And so they're like hitting them in so many smart ways with the administration against China. But it's, obviously a weaker dollar that's beneficial for tech stocks as well, right? So it's not like one single thing. There's just it is actually like really crazy how many facets of this, in my opinion, like multiple ways of how the administration is trying to attack China. But it's like there's so many layers to it. It is actually like literally insane.
Yeah. No, it is a true like Game of Thrones going on with all the different economic warfare that is at play. You have bond yields, currencies, you have precious metals and oil prices, and it's like you said, the AI trade is also at play. And I think that the AI trade is like pretty integral to the whole story. If that has problems, then everything has problems. So it's like you have to win that story, and to win that story, I think it's why mission critical is to keep bond yields from going massively higher, because that's the one thing I see that would be like a massive disruptor. And this is my way of thinking about it. If bond yields ripped higher, then you would see all these reasons for why the AI story is slowing. Other than just borrowing costs, you would hear suddenly like other stories start to flood out. That's always what happens. Price gets people to start changing their narrative. If you have stocks start to fall, people start saying, oh, circular financing and revenue slowing, and like all these things will start to come out. But really, I think that the core catalyst is if you had structurally much higher borrowing costs. A lot of these stories are very leveraged, so even a modest rise in yields can start to cause pain there. So it's a really interesting story. But Marilee, we are out of time here. We got our next show starting with Alan. I believe he is back. So thank you very much for coming on. Where can people find you if they would like to hear more from you, learn more from you? You have Instagram. Yep.
I haven't started my YouTube yet. You've been inspiring me, but I haven't done it yet.
All good.
So
no
Instagram
worries.
is currently the place to go.
Cool. Yeah, we'll get that link dropped in the chat so that people can find you on Instagram. Guys, make sure to go follow her. It's Marilee Grace on Instagram. We'll also drop the link here in the live stream chat for you guys. Marilee, thanks for coming on, and we will see you in the next one.
All right, see ya.
See ya.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, guys. My sincere apologies. I do hope that the problem is fixed. I really didn't do much. It just kind of fixed itself. So my apologies there. My computer was acting out, or my monitors were acting out, but we are back. Got my good old flip-flop beans here with me as well, so we should be all good to go. Love the conversation between Nick and Marilee. Marilee, if you're listening, I too did not have any social media, and it was really hard. But you know what? Trader Nick and team inspired me to do like the whole YouTube and other form content, and it has been great. It has been really, really great. So let's go ahead and see what's going on here. Not much has happened. You still have US yields pressured. Like Nick mentioned, I kind of do foresee maybe another leg lower. The 10-year is red, the 30 is red, the 2 is red. This is all good signs for me as far as my kind of thought process is going short the dollar. I think as long as you continue to see that theme play out, then you have a dollar pressure to the downside, and with that comes metals to the upside. But again, guys, I keep saying this, but I have to kind of sit and wait for a meaningful pullback. Someone said in the chat, I was reading as they were talking, and someone said, why not just buy gold and then have another order to buy gold even lower? Well, yes, you could do that, but with me, I'm kind of trading this, and if I buy gold initially here, and I, let's say, buy again here, my cost basis really moves to right here in the middle, which is not a good cost basis. I would really need to buy here, right, and then buy here maybe to reduce my cost basis lower. So if you were to just buy gold right over here, I think that you put yourself at risk of any drawdown, because likely will happen one day or another. So I don't want to rush into gold. I know it is very, very good looking, and I don't blame you. This is a really nice, clean looking chart, but It's just a matter of being patient, and the patience will play out, and you will thank yourself for it later. So that's kind of my thought process on that. Ball out, you hit the nail on the head, man. When you buy at the top, right? Like, this is what happens. This is what usually happens, right? You want to take a trade on gold. And so you do one of these, right? You buy gold, put your stop here below structure, and you target, let's say, 4,800, right? And this is your trade. Then gold starts to tank. And what do? Well, you say, you know what? Gold will eventually go higher. And so what you do is you move your stop loss to maybe below the 200 day, right? And it gets to the 200 day. It just continues to drop even further. And so what you do at that point is like, well, you know what? I'm going to move it behind this level of what could be support right around here. And then gold falls even more. And then at that point, your trade turns into a horrible investment, like Ballout said. Whereas if you are just patient for it, you can instead buy gold over here. If it happens, it happens. If it doesn't happen, well, at least you avoided a horrible investment. And Ballout says you keep buying it down to zero. Yeah. By that point, your broker's calling you or whoever's calling you, and they're saying, hey, man, this is a margin call. You got to top up the account or else we're going to have to close you out. When opportunity says, I'd rather sell gold right now than to buy. Okay. I like gold to the upside. Oh, Prizark, that is a key thing to mention, by the way. As soon as you say, I've had enough, right? The drawdown is too much. The margin call happens. You finally cut the bleeding and you just realize the loss. That is the same day, the next hour, it starts to rally. That always happens. How does that always happen? I don't know, because everyone's trading at different times and everything, but somehow that always happens. Yep. Hey, man, that's what happened to me. Gold took me out, and then it just kept going higher. Right. As soon as I got taken out for break even, the thing just shot higher, and I'm like, all right, that was cool. But again, it is what it is. The dude putting your hand on your shoulder will be your broker. They're always watching, man. They're always watching. Okay, as far as setups go, nothing new. I'm curious to see what Pound's doing. Pound is really strong. Guys, I do think that you do have the possibility that you see further upside. So with currencies, I kind of trade zone to zone, and we have now surpassed this zone here on pound dollar. We are also near a pretty good looking zone as well on the Australian dollar as well. I think that there is potential, if you do have dollar softening even more, that you start to get breakouts. Breakouts in Aussie dollar to the upside. Euro dollar has already done so with this level here. Pound dollar also has done so as well. Kiwi dollar, not so much. You are seeing this level right here, this structure. If you do break out of this one, I could probably see a continuation into 0.6100. Not out of the question there. I think we're seeing a breakdown happening, and I want to participate in that. So with Australia, Aussie dollar here, if you were to get the breakout, let me go to the weekly time frame. It's just cleaner. Weekly time frame on the Aussie dollar, you have this level of resistance. You can see that we capped advances 1, 2, 3, 4. So if you were to break out here, I do think that you do get a break retest type situation. And then the next structure would be somewhere right here. You can see that this will support right here, resistance, resistance. And this lines up pretty well with, what is this? 0.7600. So this would be like the next zone that I would imagine Aussie dollar trades into if you do get that breakout. So I'm going to go ahead and mark that up for the chart right there. And that's what I'm going to be looking for. So if you do get that breakout in Aussie dollar, I likely am starting to trade this to the upside over there. With the euro dollar, let's go ahead and look at this chart and see where we can find structure above this current level. My eye takes me to right around over here, which is, what is this? 0.8. Yep, 0.18. Love that. That's another level that I'll probably trade into. Pound dollar. Let's see where pound dollar looks. This one's hard. This one's hard. Kiwi dollar, we already discussed. This is the current level that we need to break out of at the moment, which is this right here. And if we do, then you can probably target 0.61. So there's a lot of breakout opportunities there on the currency side of things, which I like to see. If you do see some continued momentum there, I am probably going to buy euro dollar and put my stop below the 200-day moving average. So right here, stop below here, and then target 0.18. I think that's pretty solid. Dollar Swiss, I like the trade idea as well. Sell, stop above structure, whether it be the 61.8 or the 50, and then take it lower, and then ultimately targeting the 200-day moving average here, which we got pretty close to, but we didn't actually tap into yet. And then dollar CAD looks really nice too. It is rejecting the 200-day moving average right now. Likely would put a stop below. I guess I'll put it up here. It'll be a wider stop loss, which is definitely okay. And then my first take profit will be right here, and then lower if it continues to break. So that's kind of what I'm looking for. Gold just doesn't seem to give us the pullback, and that's perfectly okay. So there's other opportunities to be taken in the currency world, and currencies are starting to heat up a little bit. So I love that. And that's kind of my thought process and the way I would position myself today, most likely. Alan, do you tell your pickleball mates that you're a trader or English teacher? I tell them that I'm a cook, man. I say I'm a chef. Yes, I play pickleball. It's been hard to play pickleball here, man. It's been 100 degrees consistently, 100, 102. So yeah, it's tough. Yeah, like you mentioned, I will wait for the New York Open and see if there's really follow through to these moves that I'm talking about. Dollar yen, which is interesting, right? I do think, guys, you guys know my approach to this one. I'm gonna be buying dollar yen on a dollar cost average approach. If we get some significant discounts or further discounts, I like this one a lot. If you do have follow through to the downside on the DXY, then likely you surpass the 200-day moving average, and then at that point, I'm looking at 156, 155, 153. I do understand that there's going to be potentially the interest rate divergence between Japan and the US starting to narrow out a little bit. However, I do think it's going to take some time for that to happen, for that to really start to narrow. And in that case, right, I kind of want to continue buying dollar yen for as long as that trade still lives on. I think if you really try to close that gap between those interest rates, it was going to take more than a year, honestly. So I have a year worth of time to try to let this trade play out. You guys are so funny. Alan, you're sure that's why you play pickleball? I guess, man, I don't know what the average height is. I'm about 5'7", 5'8". But that, like you hit the nail on the head, man. I would not do well in basketball. I love basketball. I love watching basketball, but likely, if I go to LA Fitness and try to play basketball there, I'm likely cooked, as they say. What time does the market opens in about less than about 15 minutes, 17 minutes to be exact. Yes, Alan Cook, the mean trade. There you go. Pickleball is getting popular, man. I love pickleball. Do you guys play? Who else plays pickleball, guys? Anyone play here in the chat? It's so fun. I like pickleball because you can play with literally anyone and you'll be surprised. Like the old heads are really, really good because it's like not a huge court like a tennis court. So you really don't have to run if you don't want to. And if you're good enough, you actually don't have to move at all. You just have to get to the right spot. I have played when I was living in Wisconsin. I used to go like midday. It was perfect weather, summer. And I would always play with the retired guys, right? All these guys were retired, their wives and everything. They were all just hanging out, playing all day long, all afternoon. I would play with these guys. These guys are like 50s, 60s, right? 65s. And they would beat me, man. Like they were good, so that's like a sport where it doesn't matter how old you are, what height, what shape, what size, doesn't matter. if you're good, you're good. And that's why I like pickleball. You can have some really good conversations on the court. Hey, Marco, how you doing, man?
Hello. I was just looking at the local pickleball courts here in Zagreb.
Dude, you got to go. It's so easy to pick up. You literally just get like, you could just get a regular paddle off of Amazon or whatever and just get into it. It's so easy it's so fun, man. It's so fun. And you're freaking tall, dude. So you would be killer, actually. You would actually have such an advantage. Yeah.
I played tennis and the other one with the walls, where the ball can bounce off of the walls. I'm not sure what the name of that is.
Paddle, I believe I'm pretty sure it's paddle.
Yeah, paddle. Yeah, paddle. So it was pretty fun. But tennis, it's a huge like learning curve, and you just cannot pick it up and play. So pickleball does seem like a good option, especially to play like with my fiance, because she was pretty bad at tennis when we tried it. So she may be better at pickleball.
Well, I would say if you are good at tennis, you are a natural at pickleball. Like mostly the tennis players that go into pickleball, they're just straight up really, really good.
Cool. Well, I'm gonna have to give that a try. So how are you doing today? What are you trading? What are you looking at?
I'm pretty good, man. I am looking to potentially execute. So we're seeing DXY lead lower. It's rejecting the 200-day moving average right now, which I love to see. So with that, I kind of want to look at the idea of getting into my trades. So euro dollar long is one of them. Dollar Swiss short is one of them. Dollar CAD looks like a contender as well. It's rejecting the 200-day moving average quite nicely to the T. Yep. That one looks good. You are seeing yields lower as well, which is definitely going to be adding fuel to that.
Yeah.
You also have oil down 3% as well. So you kind of have all stars aligned right now for dollar to continue lower. I'm just going to be waiting for the open to see what happens with the market. If you continue to see like risk on and equities and that takes it higher, then I'm looking for the standard correlation of equities higher, dollar lower, and in that case, I'll be looking to execute the trades. But besides that, Marco, I'm really kind of in the same boat as I've always been. Gold, I want to participate, but it's just not giving me the pullback, and I need to accept that it may not give me the pullback this time around. So it's running, it's doing its thing. It has a really good kind of storm brewing to continue it higher, and so I'm not going to fight that. I'm just going to let it do its thing, and then hopefully one day it'll give me a pullback. But if not, I'm okay. I like currencies a lot. Currencies are starting to heat up, so I'm going to stick with that.
Yeah, I don't know why oil is down on the day. I've checked financial juice, haven't seen much. Strait is still closed, so ships are not passing through. Just don't see the reason why oil would be down. But I guess we're just gonna trade around in the range. Kind of bounce around that 85 to 110 on Brent, which is not really a major concern. I mean, it can be a concern for Europe because Europe is a big importer of energy. So selling the euro into this winter could be a good trade, actually. But as far as the US goes, I don't think it's a major issue. Also, I looked at Polymarket. So let me just show you that. If I put up my screen here, and if we go to Polymarket inflation, so the inflation print right here has some okay volume, like 30 grand so far. It's going to fill up by the September 10th. But essentially, most people are betting for 3.4% and maybe even 3.3%. So maybe even lower inflation than expected. And this is pretty accurate. I think I saw a study on Kalshi that 80% of the predictions are accurate when they come out. So like the top thing on the prediction page comes or is true, I think 80% of the time, or maybe even more. So essentially, if this is if we can believe this, inflation is probably not gonna be higher than the previous month. It's probably gonna stay around 3.4%, which means the Fed doesn't have to hike rates. The Fed will probably stay flat, and the dollar will just keep on dropping with the repricing of the Fed Watch tool.
I mean, dude, oil has really made no significant advancement since the last print. I mean, it's been respecting the technicals, I would say, doing quite well here, right? So as long as you continue to see that, even I mean, even if it hangs out by the 200-day moving average, I don't think it would rise up, honestly, man. Like I really don't. So, like you mentioned, like I've mentioned as well, I think the base case is going to be that it stays neutral. On the development side of things, I saw this that may be contributing to oil's slide today. The U.S. may return diplomats to the Middle East as soon as this week, so maybe that's good. You also have maybe the market is kind of taking what Scott Besson said yesterday as far as the threats to the sanctions, the extra sanctions. Maybe that's going to be resonating with the market, and maybe they think that it may actually work. Who knows? Right here, the chat, Marco. Why did gold crash massively starting at the 1 minute chart? Marco, do you see anything on that 1 minute chart? Let's see. I think I'm sure I can find a reason for it, man. Okay, so I see this inverse bearish flag, fair value gap right around here. We tapped into it, and I think we swept liquidity here. And then yeah, man, I think that's what it's gonna be. You probably see a continuation lower, most likely. Gold likely sells off from 46.25 where it's at right now, likely to $13 an ounce, I would say, which is a 99% drop in the price of gold. Do you see anything different, Marco, or do you like this trade idea?
I just think you missed one rectangle there. So just above 4632, I think there's like a small resistance level that may the price may bounce off of. So we may revisit that on the 1 minute, and then we go to your target.
I see.
You know,
I see.
I think that's more high probability.
Yeah. So like we broke this right here, and then you had a kind of breakout right here, right? So we swept the liquidity.
You're a natural.
Right there. Dude, I'm a natural, bro. You don't know this, Marco, but this is the money maker right here, okay? This is what pays the bills for me. Let's see. Then you have this one right here. So as long as we stay under pressure, look, man, we got two trend lines here as defense. You have one here, and then you have this one up in the sky as well. Yeah, man, we are on track. I think I'm retiring tonight, Marco. As long as it's straight.
And you get the Illuminati triangle in the middle of it, which is always a good confluence, and because they control the markets. Everyone knows that. So
look at that, dude. Look at that, dude. Look at that, man. Rejection to the T. This is it. As long as we don't fill in here, we are good to go. And by the way, I kind of leveraged the entire account on this, so I really only need about 50 ticks, and I'm good. I'm good.
That's the retirement right there. The retirement trade.
Alan, how much is your course? It is $65,000 US monthly cost. I only do it for a quarter, so $65,000 3 times, and you will be in good shape, man. You will retire your entire bloodline. It'll pay itself off, and you only need, after the $65,000 a month course investment, you really only need about $5 in your trading accounts to go from $5 to $1 million in only 1 quarter. So, Marco, I'm not trying to glaze myself here, but look at this sell-off right here. Dude, this is, I mean, this is just live. It's speaking for itself, man. Look at that. I'm not even joking. This is legit happening as we speak. Guys, I may have to sell the course for $65,000 after this. I may have to do that. Join the Telegram, join the Discord. If I do release it out to the public, this is how you can catch these moves every single day. It only requires about 5 minutes of your day, and then you're off into the beach, into the sunset. But
this is actually a big drop.
This is a big drop, man, on the 1 minute chart, right? Keep
on the
in
1
mind,
minute.
on the 1 minute. So let's put this into perspective, guys. This is the drop here that we're talking of on the 1 minute chart. I'm going to extend this as much as I can. Let me show you how much noise. We're joking here, of course, but let me show you how much noise we have on this chart. So when you go to the 1 minute chart, you invite a lot of noise, right? And you can see this chart or this drop here that we're seeing, and I'm joking about it. But now let's go to the 1 day. and see how insignificant. Let me remove my trend lines, man, because these trend lines, these are a secret that I'm gonna hold forever. You can't even see
Where's
the
the
bar that I
box?
drew.
Where's
Exactly.
the
You can't even see. I'm on the 4 hour too. I'm trying to be friendly and drop to the 4 hour. You can't even see the box. So the 1 hour, there it is. There it is, the box. And if you just zoom out here and look at the price action, that big drop that I was catching on live stream, it's insignificant. So that was a good old time, man. That was a good old time. How to scam 101. You know what, guys? You know what people do is they do what I did, right? They draw the lines and they make the chart all fancy. Then they go on replay on TradingView, and then they just replay the scenario and they like trade live, and they're hitting winners all the time, back to back to back. And that's how they lure you in into buying their nonsense. B1 Trading, nothing like it. I think that's the perfect name. The perfect name. We're gonna change it to B1 Trading. There you go.
Do you take payments for the 65K course, or is it the one-time thing?
No, man, it's every month. It's you gotta pay to play, man. You gotta pay to play.
Okay. That reminds me of what I saw online, like with the used car dealerships, which offer like, I don't know, 300 months to pay off like a BMW, a used BMW or something like that. And then they film a video with a client that bought a car for like 300 month payment plan, you know, something crazy like that. So,
27-year term,
yeah,
40% APR. Yeah,
yeah,
man.
basically.
Yeah,
I also saw something interesting today. So with the whole Besant news, Besant trying to kind of put liquidity into the markets, save the bond market, push the 30-year yield lower, which he's actually successful so far. I mean, the 30-year is actually going down, which I personally didn't believe it was going to happen. But then you saw, I think, Stanley Druckenmiller or some name like that, like a really famous investor trader, a friend of Besant actually, did a piece for, I think, the Wall Street Journal, a negative piece on the whole situation, a negative piece on Besant. And if you put the whole statement or the article into like the AI checker, 99% of it was written by AI. So that was pretty funny that like the top guy in the trading game is using AI to put out statements for like the Wall Street Journal. And in there you have statements like, if I can dig it out, give me 1 second.
Stanley Druckenmiller, huh?
Stan Druckenmiller, yeah. Stan the Man. I think that's what they call him.
He did this one very, very famous podcast interview like back in the days. It gets clipped all the time. I forget what fund he was at, but yeah, Stanley Druckenmiller rings a bell.
I found the article, but I don't have the subscription for the Wall Street Journal. So let me see if I can find it on X.
Nigerian Prince Trading. This guy said better than Trump's account. Yeah, man. I with that strategy, you can really make some gains. You can really get all the alpha.
Oh, here it is. So this is it. So Stanley Druckenmiller renders an unfavorable opinion of Treasury Secretary Scott Bessent's use of buybacks to defend against higher yields. And then you have sentences like, if the 30-year must trade at 5.5% to clear, that isn't the crisis, it's an invoice. And that's like textbook how you can recognize AI in writing, basically like Claude or ChatGPT. So I thought that was pretty fun. I mean, the article is completely true, and I agree with it 100%, but I just thought that was funny that it was written by AI. So yeah, even like the top guys are using it to do stuff. Yeah.
Bruan says that Stanley was Bessent's mentor, which is interesting. So for his mentor to be saying that.
Yeah, it is. And I mean, like Bessent was pretty critical of, I think, Yellen when she did a similar thing to try and kind of save the bond market before the previous election. And now he's doing the same thing, probably helping out the current administration a bit. So once you can be very negative before you get elected, but once you're elected, you pretty much are highly likely to repeat the same mistakes as your predecessors. So yeah, people kind of do the same thing as that's why also the comment is for Warsh. Warsh didn't like Powell's approach of being possibly too dovish in some instances, and he started off pretty hawkish with his initial speech, but they didn't hike at the last meeting. He didn't even mention that the inflation was running hot or above target. So he is getting more and more dovish with each meeting. And he'll probably be the same as Powell at the end of the day, where they're super happy to cut and super happy to be dovish, but waiting for the last, let's say, kind of warning sign to hike for 6 to 7% inflation to actually start the hiking cycle.
I think I mean, we've been consistent with this. I think that we are in a position where it's going to be no rate hikes. Like that's definitely where market's heading, especially with the yields how they are right now. Yesterday I did see something odd, which it was probably just because the probabilities were so close to each other, like 33 and 31. But you did have kind of the market pricing, or CME Fed Watch 2 pricing in 2 rate hikes instead of 1. Now we're back to 1. So I like to see that for sure. But I wanted to, before I go ahead and pivot out here, Marco, I wanted to ask you one thing about crypto, Bitcoin, because it's something I'm watching. I'll give you my thought process on this as someone that knows nothing about crypto, and then you can give me you can probably correct me. But with crypto here with Bitcoin, I probably foresee that what will likely happen is you tap into this level of resistance where you pivot into the 200-day moving average. And then at that point, it's really a question of, if you bounce off the 200-day, do you have buyers enough to go ahead and take it higher to where you get a break and retest, and then you're finally out of there? Or it goes back into just trading in a range. I don't think that you have enough, unless yields make a significant dive lower, that you see a breakout immediately on Bitcoin. But what are your thoughts on that? Do you think that it's still range trading? Like, is the yield story and the halving cycle enough to have this thing move one directionally up, or do you see kind of like a range bound environment?
I think the move has been priced in. I think a lot of people were expecting the uptrend in October for the kind of the bullish part of the halving cycle. And as we know, if everyone knows a statement or a fact, the market will already price it in once the actual event happens. So I think the move that we were searching for has happened. I think we pull back from here, especially if you look at like Ethereum. I think the RSI is going to extreme levels above 80, which is usually, like on the daily chart, a point of extreme, and usually you get a reversal after that. So if you look at the price of Bitcoin, I think we're just overextended, and that it has to pull back a bit. Is it the time for us to go to 100K, like pull back and then go to 100K? I don't know. I would rather play gold. If I want to play the debasement trade, if I want to play the dollar losing a lot of value and like bonds being saved, but the price being that the dollar goes down, I think gold is the best way to go. So that's my game plan for now. What do you think?
Me too. Yeah, I think if you want to play the debasement trade, gold is definitely the way to go about it. Not just because it's not because I don't believe in Bitcoin, but I think it's just a more established trade. It's one that a lot of people can agree on, whereas crypto is still something I consider new, right? So if I were to choose one asset class to go into to play the debasement trade, it would definitely be gold.
Yeah. But then the advantage for crypto was that gold already moved a lot before the announcement of the treasury. So the move last week on Wednesday on gold was not as big as the one on crypto. Crypto had like a 20% explosion up because it's been so flat in the last month or 2 months. So you get more movement, you get more volatility, possibly even more opportunity if you can position yourself on Bitcoin. So it's kind of, you have to pick what you like more. I think the edge is a bit better with gold. I think,
For sure.
the edge is a bit better. And I have a clear level for pullbacks, which is either the 200 SMA or like 4,400, something like that. So top of the range, yeah, the box that you highlighted.
Cool. Yeah, I'm in the same camp then. Those are the pullback levels that I'm watching for. Marco, I'm going to go ahead and pivot out here. One thing before I do go, I'm going to drop this one more time, guys. I'm going to drop the link to the Telegram. Go ahead and join it. It's completely free. Chart markups, daily analysis, polls, everything, bonus content, everything that you would love to see. It is right there in the Telegram channel. No paywall or nothing. Completely free for you. So with that, Marco, thank you so much, man. And we have Jackson Hole tomorrow, don't we?
I think that is on Friday.
Let's see.
I think it's you get the schedule on Thursday. So the schedule could give us some clues into the topics of the actual meeting. And then Friday, I think we get the symposium.
True. Okay, awesome. So we still have a full
it's
week.
Actually, Thursday is the.
Well, I think
this
one's an orange folder and the other one's a red folder. I don't know what the difference is. Then there's day 3 and Saturday, but we'll see.
And I think Powell is hosting, right? I'm not sure. I thought it was going to be Kevin, but I think it's actually Powell.
Is he? Okay, cool. That'll be a change.
Yeah, I'll look into it. But Powell I don't know. It would be better if it's Kevin, because Kevin can actually speak of a bit of forward guidance. Powell, not so much. So yeah, I'm going to look into that.
Alrighty, man. Well, I'll see you tomorrow. Thank you.
See you. Goodbye. Okay, let me just bring up the charts. So let's take a look. I'm in Aussie dollar. This trade is doing pretty well. So I closed 50%, letting the rest run. I'm looking to increase my dollar short exposure, possibly on a better price on AU, possibly on a different currency pair, like the USD CAD actually. So I got a comment about USD CAD on my first segment. USD CAD is not that bad. You have this trend line running through here. Selling at the trend line, good entry price. You have the 200 SMA on the daily. You have the fundamentals for the dollar being bearish. You have the Canadian dollar or situation in Canada improving a bit, I would say. If you look at the unemployment in Canada, you have a rounding top, as they call it. So you had the numbers rising, and now they're starting to fall. So buying the CAD may not be such a bad way to go. So what you can do, and what I'm personally planning, is possibly scaling in more on AU and maybe taking a stab short on USD CAD. We will see how it goes. If you want to get notified about my positions, you can join the A1 Trading Discord. The link is in the description. So oil is still going lower. The dollar is starting to, well, the dollar is flat on the day, doing nothing. PC tomorrow, yeah, but I think it's going to be a non-event, if I'm being honest. So this week, core PC tomorrow. The Aussie inflation will be important because I'm holding a long position on AU, but the core PC, I don't know. I don't think it's going to be that important. Jackson Hole could be. S. Luggy says, I'm not expecting much for this Jackson Hole meeting. I agree. If you look at the title is pretty boring. We get the schedule apparently on Thursday. So in the schedule, you will get even more like subtitles. It'll give us a bit more insight as to what they will talk about. But I don't think it's going to be much. I think the next important event will be the NFP. Next week, NFP, September 4th. That should be important. That should be a big one. So far, I think the general forecast is for a number higher than the previous number. If we look at US jobs August, how many jobs added in August? Again, the volume here is only 14.7K. That's super low, so the signal is not reliable. but the market is thinking 50 to 100K. Definitely above zero. That's what the market is mostly saying on Polymarket. It was a similar case, I think, for the last NFP, and then it came negative. So Polymarket was definitely not accurate. We'll see. We'll see. Usually, like, Polymarket is more accurate than Bloomberg or Reuters. So you can get a bit of a better signal, especially if many people are looking at Bloomberg or Reuters, and the Polymarket signal is different. The Polymarket one is usually more accurate. So if you trade that, like I had one trade not too long ago on AU for the US CPI, where that was the case, and yeah, it didn't. The number came in as the forecast, like as the forecast on the Forex Factory. So I didn't make any money on it, but it was a solid trade idea. PC gonna be a non-event unless we see some major misses that might feed into the recent USD softness. But don't hold your breath. I think we need to get the CPI. I think we need to get the CPI and the PPI, which are coming out on September 10th and September 11th. That's going to be after Labor Day as well, which is usually a sign when the volatility kicks back in, and all of the big players, institutions, bankers, hedge fund managers, pension fund managers, they come back to the office and they look to put on positions for the end of the year. So end of the year trading, if you think about it, as a portfolio manager, you kind of have September, October, November, and December to put on the last few positions and try to squeeze out as much percentage as you can and pump those numbers up going into the year's end. So if you can identify a popular trade idea going into September, you can be sure that a lot of size is going to get put on in September by the big managers, right? And the managers, they tend to be a bit more aggressive in going into the year's end as they want to pump up the numbers, especially the ones that are probably or maybe down or break even on the year. They kind of want to redeem themselves because they know if the year ends and they are negative or break even, well, they're going to lose investors. That's just how things go in finance. Marco Aussie CPI is what I'm eyeing right now. Yeah, that's going to be important. Absolutely. I'm already positioned long, so there's not much for me to do. It would be great if inflation can print higher than the forecast, which looks like it's not going to do. But yeah, maybe I can find it on Polymarket. So Australia inflation July. I'm not sure. It says core PC. That's for the US. No, I wanna get Australia. Yeah, I don't think Australia is gonna be on here. The volumes are just too low. Anyway, sell America. I wouldn't say sell America. I would say sell the US dollar and buy stocks. Stocks have opened, so let's take a look at that. SPY. SPY is still below the 10 EMA, so starting to recover. For my stock picking, I need the SPY to be above the 50, 20, and the 10 EMA, clearly above them. Okay, and then I can take some individual stock breakouts. I do want to mention, if you want to get funded, do take a look at Ola Prime. So Ola Prime, you can get 20% off with A1 Live. So if you have developed your edge, if you have proven yourself to be profitable in the live markets, if you want to expand your trading capital, do take a look at Ola Prime, because you can get 20% off. Now, some of the things that I like about this firm, there's no consistency rule. If you're a swing trader, this is a major selling point. And Trustpilot, they have a bunch of reviews, plus the ratio of the reviews is really good for this niche. 3.4K, 4.5 out of 5. Ratio 5-star to 1-star. I would recommend absolutely read through the reviews. Join the A1 Discord. You can join for free. Talk to other traders. See what their experience is with this company. So far, I know a couple of traders who have gotten steady payouts and are pretty happy with Ola Prime. So yeah, we definitely recommend them. If you're interested, the link is in the description, and you can get 20% off with the code A1Live. Sluggy says that has been a bad proposition lately. It's US exceptionalism trade. I mean, yeah, selling America, like selling the stock market, doesn't make a lot of sense. Hell no. Buying the stock market makes a lot of sense. But selling the dollar also makes sense. So what I would do is bonds. Personally, I think the yields overall continue going up. I don't think the government intervention is going to be bullish here. So things like TLT should go down as the yields to price, there's an inverse correlation. As the yields go up, things like TLT, they go down. So far, I have been wrong, or I am wrong so far, because the yields seem to be going lower ever since Wednesday last week. It would be pretty weird if this actually goes much lower, because that would say that the government intervention, and it's not a big one, it's only 4 billion. I think it's an increase from 2 billion to 4 billion. It's not a big increase, so I don't see it. I don't see it. The market is a huge wave that's almost impossible to stop. So I think this is just a short-term pullback in the yields before we actually continue on the path to the upside, which you can say is bad for the US, yes, but not necessarily bad for stocks, US stocks. You need to know what to play. Anyway, I have reached the end of my segment. Thank you very much for watching. You have Tiger coming on in 30 seconds. You can catch me again tomorrow and pretty much every day this week for 2 segments. I wish you good luck and see you in the next one. Yeah, that's it. Goodbye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
Well, good morning, everybody. Happy Tuesday. Hope you are all doing wonderful out there. And just wanted to piggyback on Nick's commercial that he had there about Ola Prime. They have just released a new challenge account, guys. So this is called their one-step boost account. This is something that I do believe they put on the Discord channel. So if you guys have not seen this over on the Discord, definitely go check it out. But just a couple details on this new account that they have. So they just dropped their one-step boost. It's a 500x leverage account, as you can see on the screen there. Built for traders who want speed, flexibility, and bold setups. It is a one-step challenge, 8% profit target. Again, up to 500x leverage for the majors and the minor pairs over there. No trading days as far as a minimum goes. Okay, a lot of other accounts out there have 2, 3, 4 minimum trading days. This has 0. So 3% daily loss, 6% trailing max loss, 90% reward split up to that. News trading is allowed in this challenge account. So guys, this is just this is Ola Prime's way of coming out with a brand new account, something you can get funded in ASAP. Okay, rather than going through some of the other lengthier challenges. So yeah, definitely go check this out. James, I'm not sure if you can add that link into the chat or not there. If not, I can. But yeah, the 20% off code, of course, using A1 Trading. And yeah, just go to allupprime.com to check that out. But again, if he can get that in there, great. If not, I can always copy and paste this link in for you. That way you have it. But actually, it's just real simple. Ola Prime Forex one-step boost challenge, guys. Okay. So it's just a cool thing that they've added in there for some speed, for the speed demons out there. So anyway, guys, wanted to get that out. Again, it is on the Discord channel as well. I think this was released on Friday, maybe on Friday's Discord post. So definitely go check that out. Guys, let me know what tickers you're looking at, what items you're looking at. News of the day, or big news of the day yesterday, was obviously Operation Economic Outcast that was released by Scott Bessent. That's, of course, the Treasury Secretary here in the States. Really tightening their grips in Iran as far as their economics. So really trying to sever those economic lifelines that they do have until they stand alone. Some new sectoral sanctions targeting really 5 areas. So they're targeting the digital assets, technology, gold, aviation, and shipping. Again, we kind of talked about the last couple of days or so, but they're going from more kinetic strikes to more economic type warfare. So yeah, this was a big announcement by Scott Bessent yesterday. It was about a 17-minute chat that he had in front of everybody. Answered a few reporters' questions, but pretty stern about it. So it sounds like they mean business. Over 60 entities, individuals, and vessels have been sanctioned. Strong secondary sanctions warning, and this is to the other countries. Any country or company still enabling Iran risks being cut off from the U.S. dollar system. Guys, that's not a good deal. I don't think any country wants that, whether they like it or not. The U.S. dollar is the world's reserve currency. It's been so for 100 years or so, whatever the number is. So that's definitely not something that they want to fall off of if they want to be able to trade freely. So let's see, what else did I put over here? Blah, 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 blah. And when this came out yesterday, I don't know about you guys, I didn't really see anything move too much. I mean, the markets felt pretty muted. I didn't see any giant spikes up or down on major assets. So it's going to be interesting just to kind of see how the trading day goes, and really the rest of the week, to see what the market thinks about that. Yeah, I think that was the main thing that I saw on that. So anyway, just wanted to get that out there. Again, that was the big news of yesterday. And yeah, we'll go from there. So going back on over here to the top setups, I think I need to refresh this. Hi, Tiger, pound dollar slowly. Okay. Do I go too fast, Andrea? Do I go too fast? Gold is breaking, pound dollar slowly. We're not making too many friends. Yeah. Again, guys, we're just here to report the news and the facts. Whether it makes us look good, bad, indifferent, doesn't matter. Hey, at the end of the day, it's stuff that we want to know of for the sake of our trading and our markets. So, so yeah, I hear you. I hear you on that. So pound dollar +8, silver and gold up there as well, +8, +6, euro dollar still at the top. So yeah, let's go have a look at gold and the pound dollar over here and see what we got. So starting with gold, since that was first on the list, we have very prominently broken through that old supply zone confluence that I had drawn up over here. Again, for me personally, I'm still waiting on this demand because it pretty much turned into what's called a flip zone, guys. That's a zone that goes from supply to demand. It's basically a resistance turns support if you want to look at it from that angle. Okay. So still keeping an eye on this. I don't like to pay full price for anything. I do need a discount, just like the yellow arrow suggests down there, for that potential bounce to the upside. So that is going to remain the play over there. Even when you look at this thing on a daily, if I just redraw this, now I've got a daily demand, guys. Just color that yellow. We got a brand new daily demand. So that's going to be this hammer candle with a really skinny real body. Okay. Closed closer to the top of the range. That is a new daily demand that has been formed. And then from within that daily, we could break that down further. I already had an alert. Well, I basically stole that rectangle, so we'll just color in a new one here, and this will be our 4-hour confluence, guys. 4-hour confluence, just towards the bottom end of that daily. Really like that area. We do have a little more congestion up here, but we really didn't have any volume leaving this area on this gap out right here. You see down here, we just had average volume bars. However, this one here, the reason I liked this one so much, remember, is because the leg out gave us an above average volume bar. Talking about this one here, okay? Now, the one thing I do dislike, I got to be completely transparent with you guys. Yes, we did get our gap out. Yes, we did break a structure, but what happened when we got up to the top? Did the buyers have 100% complete control of this? Really over those next 3 candles? Or did we get some wicks on top, suggesting that the shorts stepped in and tried to keep it relatively in check? Well, the buyers or the bulls eventually did win this battle, but that's just a little bit of something I want to keep in the back of my mind if and when we do return to the zone itself, is the fact that we did get those wicks on the top sides of the candles. Okay, that could have looked a lot prettier, a lot better. How much of this yellow candle, this is just questions that I like to ask myself, how much of this yellow bar was sell volume? Right? It's just a thought, it's just a question. It's all within the daily, and we still do get the gap. So structurally, I like it. And the fact that it's a flip zone, former resistance to support. But if that fails, remember, we still have last Wednesday's bond headline basing structure a little lower down here, guys. There's no denying we got a lot of smart money that got involved down here. So, yeah, nothing's really changed for me on gold since yesterday. This is pretty much the same thing I mentioned, except now it looks like at least we're trying to, if we scroll this thing down to some smaller time frames, well, now we're starting to get a little bit of minor structural breaks to the downside. So this, to me, would suggest perhaps we're getting a pullback to a discount, right? So I like it. I like that it's doing this in context of a very bullish, top setup score over here on the Edge Finder. Again, +6. Not very bullish, but it is bullish, +6. So go ahead and just continue that little trajectory, and I'll be one happy tiger, right? I prefer that the 4-hour itself get touched, since that's where the second set of prominent eyeballs are at. And that's going to be it. Again, if this fails for whatever reason, got a stronger one down below. And I would honestly, guys, if price does come all the way down to our bond buyback headline price area, I would definitely make sure and put my stop loss below all this. I don't want any part, because see, this is a skinny zone. Keep that in mind. Now that we've gotten this far away from price, to me, this looks like a little bit skinnier of a range now. So I probably would, just for safety reasons, just incorporate all this ugliness down here, even though it's pretty well efficient price structure. There's no real gaps to speak of. Yeah. With this being such a skinny zone, literally it's what, $15 wide on a $4,400 instrument. That just screams small to me. But there's no denying the volume. There's no denying their strength trying to come out of that area. But despite that, I personally would put my stop below all of it. And then just take price back to the top. Okay. So nothing's really changed on gold for me. Silver has a similar zone in a similar area. If we go back to the 4-hour for a second over here. Okay. Pulling into a 4-hour just like we are on gold. So it's a confluence. I would like to see both of them hit the zone at the same time. And then at that point, just look and see what gives me the best confirmation type look. I mean, if we look at the scoring, silver is giving us a +8, gold's a +6. So silver technically is a little stronger. So I might even look the silver route if we were to get price to drop at the same time. Or just break it into 2 trades, half risk, half on silver, half on gold. Okay, there's a couple options to play down there. But prominently, favorably, I would probably pick silver since it's given us a better score. Okay, so that's gold, silver for you. Andrea asked about pound dollar. Let's see if we got any changes whatsoever. It doesn't look like we did. So still got the daily demand at the bottom down here. Got some confluence, got some demand zones as well. Remember, we broke through support or resistance rather. So that frees me up to feel pretty confident about this area down here. Takes a lot of money to break supply, structures, swing highs and lows. Okay. So now that I've seen this picture, just need a retracement. All this up here to me is expensive. All this up here to me is congestion. This whole range, it's just one ugly sideways range. I like to see it because it tells me it's slowing down, perhaps giving me a chance or giving price a chance to eventually turn around to the downside for that buy. 4-hour demand inside of the daily. And but the one I'm the most excited about is, guess what? Wednesday's bond headline price action right here. Okay. So again, all those Wednesday zones, demand and supply zones that were created preceding that headline remain my favorites, guys. So this is where I just have to, for the way I trade, I just have to be patient. It can be hard to do at times, but I got to be patient. We got to be patient and wait for price to come to us. All these traders up here are impatient. They're buying breakouts. They're getting turned into liquidity. At some point, would not shock me to see a retracement, take all their stop losses and come down to where the real value is, guys. The daily tells us that because of our base followed by our strong gap out that broke structure. Okay. So just don't become the liquidity. Don't be these guys up here. Nobody on this channel, I don't think, wants to be buying up here. It's too expensive. And the natural ebbs and flows of the market suggest that in a strong uptrend, we will get some type of basing, some type of retracement, even if it's just a retracement to the next, in this case, support for a push. So that's going to be pound dollar for you. Euro dollar, very similar situation. Aussie dollar, very, very similar situation. Kiwi dollar, very, very similar situation. They're just all expensive right now, guys. They're expensive, and we got to run, and also we run the risk if we look further to the left of bouncing into some overhead resistance, overhead support, or overhead resistance. I'm sorry, supply is what I was trying to say. Let's see, what have I got on my screen there? Oh, I was playing around with some volume profile stuff. Yeah, even when you look at volume profile, swing low to swing high, where's the bulk? Where's the bulk of our trading? It just so happens to be going right through here. That's our, let's call it a point of control. I don't want to get into that, guys. Might be getting a little more advanced. We'll just keep things simple over here. But yeah, just need some discounts. Okay. This is the hardest part about trading. Well, it's not the hardest part about trading. It's one of the hard parts about trading, sitting on our hands and waiting for price to come to us. Now, what about dollar CAD? Remember I told you guys yesterday about this one? Bounced into the daily, or we weren't quite there just yet, I don't think. Get out of my way. What time was that? Tuesday. Oh, yeah. So this happened overnight. So I was talking about this zone over here where you can clearly see my 4-hour. Now I'm on a 1-hour chart, but these are 4-hour zones up here. Some confluence points, some zones on top of zones, all within the parameters of the daily supply. Okay. We had our base out, we had our base, we had our drop. This candle right here happened to represent the first spot where our volume really picked up, this leg out candle. Again, Wednesday morning, preceding the bond buyback headline. And then right here was our big fat red candle suggesting ultra high volume on this push out. So I am still waiting on this. I thought for a second about taking a short just because it hit the daily, but I really need to see that second set of eyeballs. And part of the reason I was even considering the daily was because of the fact that the red volume bar, and I think I mentioned this yesterday, started on the bar that started after, well, at the proximal line of the daily. Okay. So hopefully not to confuse everybody, but for a moment I was thinking that. Now, price has come into the daily since you and I met yesterday. And now what am I getting? Okay, here's the projection I told you guys yesterday. See a break of structure, a change of character to the downside, right? We bounced into daily, swept the liquidity. Now we're getting a sweep low. So this is essentially where that master pattern kind of peeks its head out. So you get basically a little bit of a sideways movement here for a short while. Right? This would be your consolidation. This is your expansion leg up. Now we have an expansion leg down. All I would like to see is just one more push back up, guys, just like the red line suggests there. Give me another push up to sweep yet more liquidity above here, and now we're bouncing into my sweet spot, which is the supply zone. Liquidity sweeps, guys. That's manipulation. That's you call it inducement, you can call it whatever you want, but that's what I want to see in order to possibly take a short on dollar CAD. So not financial advice. That's just the structure I see. And that's going to remain my favorite. Now, I could get very impatient right here just because it changed the character to the downside. It broke a structure, and I could start buying the break or shorting the breakout rather. And you will get shorts. You'll get shorting just because it broke this minor structure, but that's not enough for me because I don't want to short down here. I don't want to sell my used car for $10,000 when I could wait, sell it for $12,000 up here. I want to make a little more money. Price very well may drop before it has a chance. That's just that's the risk I run for my reward, or that for my risk tolerance, because I always want to see two prominent set of eyeballs at the same place. And we're talking this 4-hour supply right here, guys. 4 hour, all within the context of the daily. Okay. So yeah, again, daily very well could take it. If it does say la vie, I'm not going to break my rules just because it didn't fit my billing. So that is dollar CAD shorts. Dollar Swiss, we're still a ways away from supply. So there's no real point in looking at that one. That's the other bearish one. Let me double check on that. Yeah. Yeah. Guys, what you got for me? Let me take a look at the chat, see if I missed anything. Gold won't pull back much. There's not enough pressure, and macro is too bullish. Well, yeah, I mean, I agree with you. I'm definitely bullish on gold, but everything ebbs and flows. The strongest uptrends you'll see will still retrace at some point. They have to, because that's where traders are taking profits, right? You get big spikes up, naturally, people are going to want to get paid for it. So going back to gold for a second, you know, these are some pretty expensive prices. Think about these buyers down here that bought. Think about these buyers down here that bought, right? That's going to be enough profit for a lot of people. So while I agree with you, it's going to continue to go up. I would still expect a retracement. When these traders up here, whether it's smart money, whether it's the retail traders that got lucky on the breakout or whatever the case is, when they start taking their profits, I like that. I want them to take profits so that price can drop into my zone so I can take the other side of the trade, do it all over again. Right? So it's if you think about it, and this was probably one of the hardest things for me to get used to as a supply demand trader, was understanding that, hey, you know what? You stop and think about it. If I'm buying in an uptrend and I'm waiting for that retracement, well, I'm automatically trading into a very temporary counter trend look, right? Because that's what it is. Now, a 4-hour chart here, this clearly an uptrend. But for me to refine this, I need to drop. So when I dropped into a 1-hour time frame, I'm naturally going to see what? Lower lows and lower highs, am I not? Unless it just completely plummets and drops straight in, but that would be the worst thing because I'm not getting any necessary liquidity sweeps. So it's a very unnatural thing to do, is what I'm trying to say. It's very natural to buy a breakout because buyers see price going up, going up, going up. It's going to the moon, right? I have to get in. I have to FOMO in. So if you stop and think about it, waiting on retracements, that's a very unnatural thing to do because I'm automatically fighting a miniature downtrend. But again, I'm looking at it in context of the higher time frame. Clearly, over the last couple weeks, 3 weeks, whatever it's been, we'll just call, August 5th. Okay. We've been in a strong uptrend. So this looks good. It's not so natural when you start dropping down to smaller time frames. Does that make sense, guys? That's one of the hardest psychological things, I think, to get used to when it comes to trading supply and demand, or just waiting for retracements to support resistance. Again, you can word it how you want. I just specify supply and demand because I'm looking for direct unfilled orders. So yeah, it can definitely be intimidating at first, but after a while you get used to it and it's good to go. So yeah, definitely agree with the bullish theme. I just think that we need a retracement before I get involved, right? I would be breaking my rules if I start buying up here, right? Buying too expensive. What you got over here? Try buying some at PT. Pit. Oh. Pit. What is Pit? What in the world you got me looking at? What's Pit? What you got? Ugh. Yeah, too expensive. I don't know what it is. Look, okay, Van Eck commodity strategy. Yeah, it's too expensive. Give me a discount. Give me a discount. I don't know if this is the exact ticker you were talking about. I need a discount. Okay, there's a red volume bar there, red VSA bar, perhaps a little bit on this one here. Perhaps a little bit of demand down there. Discount. I want a discount. Don't ever want to pay full price for something. Okay. All right, let's get back to the regular assets over here. I got 6 minutes left. Guys, let me know if you have any other currency tickers or anything else. Having a look at gold or oil rather. Okay, we are starting to get a little bit of a decline since yesterday's announcement. Again, it didn't really happen during the day, during the session. This is basically when it happened. It was 2 p.m. New York City time. So that would be right here on this candle here. Okay, this was when that announcement came out. There's nothing. Gold or oil was automatically the first thing I thought of when it came to economic sanctions on Iran. Will that further cause issues with it? Well, I don't know. So far, during the London session, really the start of Asia session, or I should say the end of Asia session, started to get a little bit of a turnaround to the downside. But then London pops on and just completely sold off on oil. So is that a sign? We're going to stay range bound because of this Operation Economic Outcast? We're going to drop, or we're going to spike on oil prices? What do you guys think? This isn't something that I've seen very many times. So I don't know 100%. I got to be honest with you. I still don't 100% understand how to attack it, except sit on my hands. It's giving us a bearish signal on the Edge Finder. That's a start. Okay, when we're talking about the data, we know that this is kind of the route they're going right now versus a lot of kinetic strikes. So anytime there's not bombs flying around, that's a good thing. But economically, hey, if I have any interest in trading oil or shorting oil because it is giving us a bearish look, I got to get my moving averages and my structures to flip down because I have a let's go to a 4-hour. And this just shows you kind of roughly that equilibrium over basically July, since July started. You've got a couple spikes, one up, one down. Dang, a big old bird just flew outside of my window. So yeah, I'm just kind of looking at that as equilibrium. I really need to start seeing some of these structural breakdowns over here. 4-hour chart, you got a swing here. You got obviously a bit bigger of a swing, a major swing down here. Let's break that structure first. I don't like selling or buying really anywhere in this area at all. I got zero play for you on oil, whether that's WTI or Brent. They basically look very similar to me. But obviously, if we get any more kinetic strikes, then that'll give us a quick, simple answer that, hey, we may start looking at some longs. And if that's the case, if that comes into fruition, well, we got a higher high, higher low structure right now from this more recent major swing low. Low, high, higher low, higher high, higher low so far. That would suggest uptrend. We did break this structure over here, by the way. We have yet to bounce into this overhead supply. So if I'm only looking at the technical side of things, well, I like the buy side, but I don't have the data on my side, guys. So it's not a really good look for me personally. Okay, let's take a look at a few of my alerts I had set over here. CAD yen trending upwards. Do have a zone of demand drawn up over here that I'm keeping my eyes on. The volume could have looked better. We did break a structure. Going to keep an eye on this spot on 114 3/4. CAD yen, I think, might have fallen off the list, but do have the alert on there nevertheless. Euro yen, kind of a similar story over here. Just taking a look at some of these alerts, guys, since I got a couple minutes left. Moving averages pointed up. We've yet to bounce into that overhead resistance, that overhead supply. So similar thing. Looking at a daily 4-hour, just a little bit deeper on this one. Euro, let's see. Euro CAD's pretty congested. Kiwi dollar. This is one. This is one where I had the volume profile drawn up over here. Again, broken structures on all these dollar quote pairs. So just need some retracements. Retracements all the way down. The Wednesday look for Kiwi dollar, as an example, Let's see here. That would have been Wednesday. It's over. Oh, yeah. So still down here. That's the thing. Yeah, that's the thing. Again, broken record, guys. I need last Wednesday's retracement to pre-headline levels on a lot of this stuff. What else did I have out of the ordinary? Swiss yen. Swiss yen was on our bullish list. Did move up. However, we've bounced at overhead resistance. That's a little bit of a red flag. But, hey, do have a decent zone, again, at Wednesday's level. The headline level. Common theme, guys. You can go look about any of these currency pairs to Wednesday at 8 a.m. And that's pretty much what I'm waiting on. So that's about the easiest way to say it. Okay. Again, retracements. Price pushed quite high or quite low, depending on the asset from that. So there's a lot of people that made some money. If those people start taking profits, it's going to push price back down to those zones or up to those zones if we're looking for shorts. So if they start taking profits, push price into the zone, that's where we can flip, maybe look at taking another opportunity, because the smart money that did initiate those zones before those big, strong gaps out, well, they're going to defend those levels. I'm sure there was probably a pretty good amount of money that went into the system at that point. We already saw a lot of structural breaks, a lot of supply and demand zone breaks. It takes a lot of money to do that. So if a lot of money's doing that, price returns to those levels, well, you can bet your bottom dollar they're probably going to want to start defending those levels and either continuing their accumulation distribution in those zones or just finish off the rest of their order and let her fly. So that's what I'm looking at, guys. It's at the end of my session already. Stay safe out there. Trade safe, and stay tuned. Come back tomorrow. We'll run it all back again. Peace.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.